Good morning from a chilly Nairobi at the CIO On Air studios. It may be cold outside, but things are getting really hot in here as we discuss matters fintech. Yesterday, over 400 of you joined us online and on the digital platform, connecting, asking questions, and engaging as we explore payments and fintech, not only in the context of East Africa, but actually the world. In yesterday's leadership track, we looked at the future of fintech, and then we quickly segued into looking at the security of the infrastructure that we actually put out to enable these transactions to happen, and then had an exciting panel that looked at the role of regulation, the place of RegTech in making sure that even as we innovate, we actually don't get, as soon as we're ready to scale, we don't get shut down. Also looked at APIs in the banking sector and how the open banking sort of move would power neobanks and new ways for us to move money. Today, we focus on payments. Payments is a huge space. Just yesterday, Flutterwave and Amole announced a new partnership where they seek to enable 8 million Ethiopians in their diaspora to be able to send money back home. Things that are happening at a blazing pace. Allow me to welcome Laura Chite, the CEO at CIO, to give her welcome remarks on day 2, which promises to be an epic one. Well,
good morning, ladies and gentlemen. Day 2 is here after a full day 1, and I'm so happy to listen to some of the numbers that Mbuga has talked about. 400 plus people online watching us, engaging. It looks like there's an interesting conversation happening about fintech across East Africa and across Africa. Now, yesterday as I was doing my kickoff or giving my welcome remarks, there was one slide that didn't come out very clearly. As I was introduced yesterday, I'm a marketer and I love my marketing. And I think it is important for us to go through that initial slide before I continue with my remarks for today. So I was talking about virtual networking. CIO East Africa has gone into great lengths to bring you a great virtual platform so that we're able to continue engaging as if we were face-to-face in a face-to-face event in a hotel. So, as you connect to the new platform, and as you are on the new platform, please connect with someone new. As it shows on the screen right now, obviously what you're going to do is touch somebody on the screen, click on somebody's contacts, click on somebody and say, good morning, welcome to day 2 of CIO East Africa FinTech Summit. Book meetings with our partners. Please note, this session is able to happen because our partners have invested so much in making sure that we are able to bring to you a 2-day FinTech Summit. So please reach out to them. Fantastic solutions for you, and they will be able to solve your problems. Number 3, collect brochures and visit our various partner booths. They have gone to a lot of lengths to make sure they have enough information for you so that you can be able to engage and understand their solutions. Because remember, when they are speaking about their solutions online, they only have 10 to 15 minutes to speak about whatever it is they need to speak about. You may have a few more questions, you may need a bit more information. So they are sitting in their booths waiting for you to come and engage them and collect their brochures. Respond to the polls and surveys. Yesterday, I was so happy to see a lot of engagement online, questions, comments, and that was very exciting. Please also respond to our polls and surveys that we are posting online so that we make sure we bring you content that is relevant and makes sense and solves your problems in our summits to come. Share your comments and feedback online. I think I've already talked about that, and let's continue doing that today. The more we engage, the more we make comments, the more we ask questions on the platform, the more engaging it is for the audience, and more engaging it is for the speakers and the moderators to be able to engage with you. We need to have a conversation like we are live in a room, but as far as we are concerned, we are virtual, but the conversation does not mean it needs to stop. Virtual networking has no limitations. So in order for us to extend this further, I want us to get onto social media. Remember to tag CIO East Africa. Remember to use the hashtag CIO FinTech and also tag your organization and make them just know that you're here. Also let others out there know that you're here. Do this on Twitter, LinkedIn, and Facebook. You can take a photo of what you see on screen right now, whether it's a presentation, whether it's myself, whether it's Mbugwa, whether it's the panel sessions. Just try and post something at least every hour as we go through today's agenda. So We look forward to seeing a lot of engagement from an online perspective. Continue joining us, continue engaging with us, continue conversating with us, and continue sharing your comments and continue asking your questions. Thank you very much. And I just want to do a quick recap of what happened yesterday. You know, sometimes when we are putting solutions together as solution providers, and this is my comment to solution providers, and I think it came out clearly from some of the panelists yesterday, we really need to think about, what does my customer want, okay? Am I providing the right solution for my customer? Am I listening to my customer clearly? As Brett King, as my comment, my party shot yesterday from Brett King was about customer is king. Listen to what the customer wants. You are collecting a lot of data. So from that data, what does the customer want? Always think about that. And then Fintech has blossomed for the last 15 years across Africa. They are small companies, but they have major impact, okay? So let us not underestimate, especially all these startups that are coming up with amazing solutions. Let us not underestimate them. Let's reach out to them. And I mentioned about us reaching out to them, partnering with them, collaborating with them, coming up with new innovations that will solve problems within our financial services industry so that we're able to deliver better solutions to our customers. Transformation is not a one-man job. We know that the whole of Africa needs us for Africa to be able to transform and leapfrog to the next level of where we should be as a continent. Let's all join hands so that we are able to transform our continent and get to ourselves to the best level possible. We have the minds, we have the resources, we have the talent, and we have the skills. So please, let's go ahead and transform our continent. And then disruptive leaders need to be able to lead themselves, lead their teams, lead the industry, and they should always be agile. One of my biggest words in 2021 is agility. You always have to be agile. And this made it very clear to us when the pandemic came in. If you're not able to be agile, then you cannot be able to achieve much as an organization. So even as a leader, be able to listen to your team, be able to listen to your customers, be able to listen to those on the ground so that you're able to make the right decisions for your business to do better and to be able to serve your people better. So, ladies and gentlemen, I look forward to a fantastic day too. I think we're going to have amazing conversations. We're going to talk about what is the conversation around fintech in Kenya. We're going to talk about innovation. We're going to talk about collaboration. As Jay here said, our focus today is on payments. So let's engage in this conversation and see what we can come out with after a 2-day summit of a lot of expertise and discussions and sharing of case studies that's going to happen towards the end of the day. Because we do feel it is important for you not to reinvent the wheel, but reach out to your peers who have done amazing things. So we will be sharing a few case studies at the end of the day. So I look forward to seeing you when we're done at the end of the day, and we can recap day 2 of what has happened in the last 2 days. Thank you very much, and let's catch up on the platform. Cheers.
Thank you, Laura. Day 2 starts with strategy in payments with Ken Njoroge, an entrepreneur, scale-up coach, and digital evangelist. Ken founded Cellulant 18 years ago, and he has steered that ship to becoming a digital payment infrastructure giant, connecting consumers and businesses to more than 120 banks, 40 mobile network operators, in a network allowing for interoperability. The firm operates in 33 markets and has offices in 18 countries across Africa. Today, Ken, now as chairman of Cellulant, speaks to us about innovating products for seamless and secure payments for users across Africa. Ken, walk us through, please.
Hello, dear colleagues from the ICT industry. My name is Ken Njoroge. I've been an ICT practitioner for a long time, actually an entrepreneur for many years. And over the long career, 22 years, I've been a very curious observer of the payments industry. So this particular talk, I'm supposed to share some thoughts on the future of the payments industry. So observing the payments industry over the last couple of years, I've noticed a couple of things through the journey of building my first business, 3 Mice, and several iterations in Cellulant. I think from the very beginning, the payments industry has been shaped rather less than by technology, more by just the needs of the market. So from the early days when we did micro-billing to facilitate people buying ringtones for $1, to the second phase of Cellulant, where we provided digital banking solutions that enabled payments for banks, and the current phase of transformation where we are providing these solutions for merchants. So these are sort of my thoughts about how to think about the future and look at how the market is evolving. And I'll talk about it from 5 perspectives. The first one is talking about the forces that are shaping the growth of the payments industry and how big that is. And the second is the needs in the market, the segments in the market that are driving the demand for payments. The third is the payment methods that most of consumers in Kenya and Africa will use over the next couple of years. The fourth is actually maybe who the players in the payments business could be. And the fifth and last one is the technologies that might drive that. So let's start from the market and market forces. So payments industry is huge. I think in the various times when we have tried to size it, it's maybe a $40–50 billion segment. I mean, when you think about closer to home, Kenya, M-Pesa is just shy of $1 billion in revenue in Kenya alone. So it's a huge market across Africa. What's driving this growth is mostly just a change of digitization, which is being driven by natural progression as the African markets automate, get more sophisticated and digitize, and regulators who are driving digital inclusion and financial inclusion, the central bankers and so on. So that's the first viewpoint. The second viewpoint, which is the segments and the needs in the market driving payments. So the first one is actually global and customers who are looking to make payments with Africa, in Africa and across Africa. The second is regional customers that are looking to do the same across markets as Africa gets increasingly connected. The third is large customers who have large customer bases, and they are looking for convenient ways to get paid by these customers. And the fourth is actually small and medium-sized businesses that don't have the infrastructure to build footprint across many markets, and that can only digitize, can only collect digitally. That's the second dimension. The third dimension, which is the payment methods or the payment instruments that consumers will use. So mobile money, certainly you cannot ignore that in Africa. I think now we are just above 400 million users using mobile money, give or take. Their number of bank accounts as banks have become much more digitally enabled has also increased. I think Africa has somewhere in the region of 350 million bank accounts. So payment methods from banks, direct from bank, EFT, and the newer forms of EFT, newer versions of SWIFT, those will become significant payment methods. The last payment method that you cannot ignore is the proximity payment method. Basically, cash getting digitized somewhere at an agent location or at a physical pay point or in a bank branch, that still continues to be a very large payment method. So you will see all of these different payment methods in different forms, mobile money, via SIM, USSD, via apps. You will see a lot of those payment methods via card, via tap and pay cards, and so on and so forth. These are essentially some of the landscape areas that you will see driving payments. And the fourth area in which to think about the future of payments is to think about the players in the market. Who are likely to be the players in the payments market? I think by now the largest players and will be actually for a while are the mobile money operators across many markets. Second large player are going to be banks. Banks are, payments is still a significant part of payments. Payments is still a significant part of the banking business. So banks will continue to be a player there. They will innovate from the traditional card acquiring into, let's say, mobile payments acquiring, digital payments acquiring, and other types of payments. Then fintech players of different kinds, running wallets and so on and so forth. There's going to be a significant chunk of fintech players that become payment platforms. And of course, the global traditional payment players, the card companies and the traditional acquirers and processors will also become significant players in the industry. And then by far the global brands that are traditionally non-payment, the Googles, the Facebooks, and so on, will also become a significant active players in the ecosystem. So these are, I would say, the major forces that are going to shape the market as far as competition is concerned. The fifth area, which is, what kinds of technologies are we likely to see, come together in a cocktail in the payments market? I think, when you think about it, and so the good old-fashioned USSD, SMS, and so on, so those will continue to be significant channels for payments across the continent because of their accessibility and so on. The app platforms and facilitating e-commerce, mobile commerce, and so on, and all of the associated technologies there you see. Data science, AI, machine learning, these are going to be significant technology platforms that power the payment landscape from fraud management and so on, and credit rating and so on and so forth. These are and powering things like pay now, buy now, pay later, buy now, pay pole. These kinds of models will be powered by AI and machine learning. And then, the good old-fashioned card technologies from, swipe and punch a pin, tap and pay, NFC, and that cocktail of technologies then driving the proximity payments on, customer present payments and so on. And then, of course, there's a lot of other, different types of, traditional technologies that will come in a cocktail. There's some of the newer kids on the block, like blockchain. I think these, they're still very young and the use cases are still sort of forming. But you could actually see all these technologies and sort of forming a good mix in the future of payments across the continent. So thank you very much. That's sort of my 5 points and thoughts across payments, and I hope you enjoyed the discussion and continue the discussion and continue the learning and enjoy the rest of the conference. Thank you very much. Absolute pleasure to be with you. My name is Ken, outgoing CEO of Cellulant after 18 years. A pleasure to be with you. Thank you.
We're betting on the technology for the future, not the technology for the past. So having a broad network, having global companies now running at full enterprise scale gives us great comfort. It's dead clear that no one is innovating in this space as fast as Cloudflare is.
With the help of Cloudflare, we were able to add an extra layer of network security controlled by Allianz, including WAF, DDoS. Cloudflare used as a CDN also allow us to keep cost under control and caching and improve speed.
Cloudflare has been an amazing partner in the privacy front. They've been willing to be extremely transparent about the data that they are collecting and why they're using it, and they've also been willing to throw those logs away.
I think one of our favorite features of Cloudflare has been the worker technology. Our origins can go down and things will continue to operate perfectly. I think having that kind of a safety net, provided by Cloudflare goes a long ways.
We were able to leverage Cloudflare to save about $250,000 within about a day. The cost savings across the board is measurable, it's dramatic, and it's something that actually dwarfs the yearly cost of our service with Cloudflare.
It's really amazing to partner with a vendor who's not just providing a great enterprise service, but also helping to move forward the security on the internet. One of the things we didn't expect to happen is that the majority of traffic coming into our infrastructure would get faster response times, which is incredible. Like, Zendesk just got 50% faster for all of these customers around the world because we migrated to Cloudflare.
We chose Cloudflare over other existing technology vendors so we could provide a single standard for our global footprint, ensuring world-class capabilities in bot management and web application firewall to protect our large public-facing digital presence.
We ended up building our own fleet of HA proxy servers, such that we could easily lose one and then it wouldn't have a massive effect. But it was very hard to manage because we kept adding more and more machines as we grew. With Cloudflare, we were able to just scrap all of that because Cloudflare now sits in front and does all the work for us.
Cloudflare helped us to improve the customer satisfaction. It removed the friction with our customer engagement. It's very low maintenance and very cost effective and very easy to deploy. and it improves the customer experiences big time.
And Cloudflare is amazing. Cloudflare is such a relief.
Cloudflare is very easy to use. Trust. Cloudflare today plays the first level of defense for us.
Cloudflare has given us peace of mind. They've got our backs.
Cloudflare has been fantastic.
I would definitely recommend Cloudflare.
Cloudflare is providing an incredible service to the world right now.
Cloudflare has helped save lives through Project Fairshot. We will forever be grateful for your participation in getting the vaccine to those who need it most in an elegant, efficient, and ethical manner. Thank you.
Thank you, Ken, for those 5 insights. A correction is that Ken transitioned recently from CEO to take up a role on the board. He penned a piece titled Jumping Off the Lion, speaking into this transition. Catch that on his LinkedIn profile. Innovation moves faster than regulation, and it is important that the sector players present themselves well to avoid being shut down or running into challenges. The Association of Fintechs in Kenya was recently birthed and have this and other agendas at heart. Harry will moderate this next session with members of the association. Harry is a serial entrepreneur with a passion for technology, exceptionally good at a number of things, especially seeking new technology options and ensuring that they're integrated into any existing technology stack. Apart from tinkering with systems, Harry has a strong communication skills that are highly valued. He's an ICT consultant, an e-government strategist at heart, and has worked with East African governments in crafting e-government implementation strategies. Harry, over to you and the panel.
Thank you so much, Mbugua, for that intro. I've never had an introduction where somebody calls me a serial entrepreneur. So it's nice hearing that from you. But yes, I like creating things. I like starting things up. So yeah, thank you for that. Interesting discussion with Ken there. Excellent insights as well. And the last time I met Ken, we were talking to him about his transition and how easy or how difficult it is to run a company for 18 years and you leave it. So that was an interesting discussion as well. But now I'm joined in studio by one Mr. Ali Hussein. Karibu.
Hey, Harry.
How are you?
I'm good.
Good to have you in studio.
Thank you so much. It's my second day here today. I was here yesterday talking about neobanking.
Yeah.
And today we're here talking about AFIC.
AFIC, the baby called AFIC.
The baby called AFIC.
Yeah. How did you guys? Okay, before we even go there, we have a panel. So we've got almost the entire board. Almost the entire board of AFIC is with us today. So we have Muni, we have Marietta, we have Christine and Elizabeth. I'll give them a moment so that they can introduce themselves. And also just share some of the views, some of the insights and some of the drivers to AFIC. So maybe we can start with one Mr. Muni up there with a good shaved beard. Did you go to the salon? Please have a quick introduction because we're tight for time, but just a quick introduction of who you are and what you do at the association.
Thank you, Harry, and good to be here. Good connecting. Hi, Ali.
Hi, Munyi.
So my name is Munyi Ndiga. I wear the hat of the Secretary of the Association of Fintech in Kenya. Been in the financial technology space for the last 10 years, tech space for the last 15 years. Had an opportunity to do business. And interestingly, the keynote speaker was my former boss for 10 years. And we had an amazing time at Cellulant trying to build a network and grow across Africa. And he gave me an amazing opportunity to travel across 16 countries and build a payments network across 16 countries. And in there is where I got this fire for Africa, wanting to see solutions built by Africans for Africans, and wanting to get solutions that can solve the challenges that we face in this continent. And therefore, Africa is a baby of this. I don't want to speak much. I want to let my colleagues as well. But we're here because of the passion we have for this continent.
Let's go with Marietta.
Morning, everyone. It's a pleasure to be here today with the rest of my board members from the AFIC board. I am a lawyer by profession with a passion for financial services, and I currently work as the head of legal and compliance at Chippercash. I'm looking forward to an interactive and enjoyable conversation. And no, I did not go to the salon. Muni went, not me.
And Marietta, you'll be keeping the cash for us, right?
Yes, I will be keeping the cash. I know that lawyers traditionally are challenged.
I'm told you will collect it, then keep it.
Collect it and keep it. And I appreciate the trust of my fellow board members because lawyers don't have a reputation for being good with mathematics. So I appreciate the trust.
Excellent. Then Christine, just a quick intro.
Good morning, everyone. My name is Christine Kitale. Within the AFIC board, I serve as Ali's vice chair, and I'm really excited about the organization and looking forward to making a positive change within the innovation space in Kenya. I'm passionate about Africa and development, and I'm happy to be in this forum.
Excellent. And last but not least, Elizabeth.
Good morning, everyone. My name is Elizabeth Kachumbo, and within the AFIC board, I deputize Marietta. I'm the deputy treasurer. I am an engineer by profession, but I have transitioned to product space. I am passionate about fintechs and what it has been able to do in Africa and what technology basically is enabling in the region and around the world. So yeah, very passionate about this space, and I'm looking forward to an engaging session. Thank you.
Thank you very much. I think this one of you is on the platform, so you're watching two screens. So maybe you can drop off the main event platform so that we don't have that feedback. Please, I don't know who it is. Yeah, there's an echo. So anyway, and Mr. Chairman, quick introduction. Okay, everybody knows you, but hey.
So my name is Ali Hussein. I have been in the tech space for as long as I remember, Harry. Almost as long as you. 25 years at least. Been in the MarTech space, marketing technology space, during our time at 3 Mice, Interactive Media, Wonderman. In the recent past, of course, Fintech has been my passion, and really one of the key driving forces around bringing this conversation around a collective for fintechs in Kenya and across Africa. By the way, something that is important to note is that we are part of a larger network of fintechs across Africa. Mm-hmm. We're part of the Africa FinTech Network. The conversation must change around how we engage with government, how we engage with other stakeholders. And when I talk about government, I talk about policymakers and regulators. My favorite topic is around having a seat at the table and respectfully walking into a room and saying, we would like to have a seat at the table and discuss matters that are relevant to the industry that we work in. So the Association of Fintechs in Kenya is really about ensuring that there is a voice for fintechs. There is a unified voice for fintechs across the country.
Okay, so we've seen many associations, and this can be answered by anybody in the panel. But there's a lot of associations, and within the IT space as well, there's quite a number of associations. So why a new association? Why not join one of the associations and just create that value from there?
Look, Harry, the fact of the matter is that there has not been an all-encompassing unit or association that speaks for fintechs. Fintech is becoming a major and important component of everyday life, from M-Pesa to cellular to all the other startups that are coming up, not just in Kenya, but across Africa. And fintech is becoming a major conversation, not just in Kenya and Africa, but globally. So if you look at just one component of the issues that we are going to deal with, which is funding and investment for fintechs, in the last 3 years, close to $4 billion has been invested into Africa by both internal investors and external. Out of that, close to 50 or slightly higher % of all that investment is coming into fintech. A lot of countries have had, quite a number of countries have had fintech associations for a number of years. We have lagged behind in Kenya for whatever reason. What we are saying now, we are correcting that.
Okay.
Yeah.
Okay. So you've sort of alluded to it, but maybe I don't know who will just tell us, give us like succinctly what are the objectives of this association. I don't know who can take that up.
I think let's ask Munyi to run with that.
Munyi, can you give us just succinctly what do you aim to do with this association? I know Ali has sort of alluded to some of those things, but what exactly will this association do?
Thank you, Harry, and thank you, Ali, for giving the overarching objectives of AFIC. So very quickly, we've got 6 or 7 objectives that we want to achieve. We know Kenya to be a technology hub, an innovation hub, home of M-Pesa. So we want to maintain that heritage and grow it, protect it, and pass it on to generations that come after us. We also want to foster national and regional international cooperation. Ali has mentioned that we are a member of the Africa Fintech Network. What this means then, it gives us exposure to the African continent in terms of knowledge sharing, partnering, collaborating, and seeing how we can exchange ideas across the continent. We also aim to collaborate with the larger financial services stakeholders. We're talking about central bank, the government, parliament, who craft laws, KRA, who tax us. We're looking at people like the Kenya Bankers Association, Insurance Regulation Authority. I mean, all these players, we're looking to collaborate. We're also looking to raise awareness on the benefits of adopting digital solutions, and we can see the benefit it has had on businesses over the last 1 year since we got into this pandemic. We also want to provide a platform for peer learning, very important, knowledge sharing. How can we be able to exchange experiences? How can we be able to share knowledge on our experiences on how we tackle specific issues that we face day to day? We also want to mitigate, your common challenges faced by member companies. So you'd find that a member company, a couple of companies are having challenges in the industry. How can we be able to come together and help them mitigate those challenges? And of course, networking opportunities, really important. Like we're doing right now, Harry. I mean, we are having a conversation. We are exchanging ideas. Everybody is doing different things. How can we be able to pull all this together into a knowledge pool and be able to sort of share the learnings that we have in our day-to-day business. And finally, as an association, of course, we must raise revenue. And therefore, one of the ways we're looking to raise revenue, of course, is via events, which are enriching to the membership, and therefore to fund the association and make sure that it runs quickly. That's the objectives that AFIC looks to achieve.
No, very noble, very noble. I really I like those things. You know, there's nothing as important as bringing in people of like mind and trying to build something bigger than any one individual in the group. So, you know, there's this question about. So I used to tell Ali, I dislike the word fintechs. I think they should just be fintech companies or fintech organizations or fintech I don't know, but I feel like fintechs is so cliche. But anyway, that's me, and forgive me for that. But so who can be a member of AFIC? Who can be a member of AFIC?
So just pulling from what Muni has shared in terms of the overall objectives, in principle, we believe that there is no individual or entity that has a monopoly on innovation. So we are committed to collaboration, and that reflects the membership that we hope to encourage with AFIC. And so we have different categories of membership. We are open to having students join. We are open to having professional organizations, corporates, innovators, startups. And that is essentially because we are committed to fostering collaboration. We are committed to fostering partnerships, which are really important in developing the ecosystem. And we also have an understanding that there is no organization within the financial technology space that is able to thrive as an independent entity. At the heart of fintech, in fact, I know that you find the name cliche, but fintech, finance and technology, there is an interdependence there that is at the heart of financial technology, and our membership will reflect that.
Okay. So if I'm running if I'm running an agricultural business that has some payment in it, can I be a member of fintech of AFIC?
So when I say that we foster interdependence, it would not be a passing interest. It would be a commitment to developing the ecosystem. And so there is a difference between a consumer of a financial technology service versus a company that is committed to developing the ecosystem. So our focus would be on companies that are committed to developing the financial technology ecosystem.
Got it.
But within that, there would be
this is the supply side of the fintech, not the demand side of fintech.
Correct. Yes,
okay,
correct.
Okay, I get
and,
that.
And maybe just to clarify, in terms of what I was mentioning on our collaborative approach, it is important to have different players within the industry contribute because of the specialization when it comes to financial technology. There is a very high level of skill and knowledge that is required to develop solutions. And so each of those entities that develops that skill knowledge base, there needs to be an avenue for them to collaborate and be able to share that knowledge and put those skills and knowledge together to develop the ecosystem. So it is really a question of the specialization within the industry, and because of that specialization, independence is key.
Okay, cool. Then the other thing that and this could be a hot topic, but you know it's actually an open secret that people within the financial services market or industry, and especially fintechs actually, especially the payment guys, digital payment guys, they've sort of been these loud murmurs that Central Bank of Kenya is actually stifling them. or is not supporting them, or is not being friendly. It's being hostile. So how do you intend to engage such players within the market?
Look, Harry, you're right. This is a hot topic. And this is a topic that is sensitive across the board. What we are saying is that we want to engage policymakers and regulators across the board, not just the Central Bank of Kenya. But to your point, the Central Bank of Kenya has a mandate to protect the citizens of this country on matters financial. In my humble opinion, there could be better ways how that could be done without necessarily stifling innovation. And I'm not saying the Central Bank of Kenya is stifling innovation. I'm saying that the processes may require a look. And it's not just fintechs. It's across the board. I cannot sit here and pretend how the central bank operates, how their processes, how they engage people and organizations in the financial services space. What we are saying is we want to have meaningful conversations and look at how we can help this country, because ultimately it's about the growth of this country's economy. So where there are areas where we feel that something could be done better, where we feel our cooperation on the table will improve things, we will not hesitate to have that conversation. After all of us, we are Kenyans. We expect government to be an enabler, and we do not suspect that the Central Bank of Kenya is not an enabler to improve and increase expansion of the financial services sector.
Okay, and I think that's a fair point. It's a fair point in the sense that I think everybody has a role to play within the industry, and there's this concept that came. There's one time I was very interested in stuff around regulation and such, and there's a concept called smart regulation, where you're regulating an industry. But you're engaging as you regulate. So you don't sit in a corner somewhere and write regulations, then say, hey, this is what you need to be doing. So there's that consistent engagement and dialogue.
If I may add something here.
Yeah.
I think a lot of the time we have been guilty of talking above the heads of policymakers and regulators. Mm-hmm. And I think I personally would confess to actually being guilty of that. But I think with years and with a little bit of white hair, you
wisdom, you mean?
You sort of realize these are human beings like us. They want to be engaged in a respectful manner. They do not want to be talked to on social media. They want to have a seat at the table just like we want to have a seat at the table. So this is us telling policymakers and regulators, we come respectfully. We come with the intention of improving the fintech ecosystem in this country. We do not have the monopoly of doing this alone. We seek your help and cooperation to make sure that Kenya continues to be a leader, not just in Africa, but the world over in matters fintech.
Okay. That's I don't know what is happening to my friends. Bobby Yahweh has gone mellow. Ali Hussein is gone mellow. So what's going? Where is the fire? What happened to the fire? But anyway, that's sorry. I'm digressing. I'm digressing. Okay,
Harry, fire is important when you're cooking. Not throughout, So sometimes you need to just poesha kidogo.
Okay, my friends have gone mellow, so I think I'll have to mellow as well. Okay, so
Harry, I just wanted to interject.
We have AFIC with all those good objectives. So how do we move forward? How are you planning to engage the different fintechs, and how do you rope them in, and how do they see value? Because you see, at the end of the day, any association needs to provide value for its members. So what is that value that these guys need to look at and therefore join the association?
Munyi.
Thank you, Ali. I think my colleague would be best placed to take this. Kindly, Liz, tell us, what's the way forward for AFIC?
So some of the areas we're looking at for AFIC is one, we intend to grow our membership, as what both Moni and Marietta have touched on, is that there's so many bodies out there, and there are also many fintechs or these financial.
We can't hear you properly because you're on the platform. So you need to log out of the other platform, then you just stay on this one. Because we're getting feedback from you. So log out of the event platform, so you'll only be on the link.
All right.
Yeah. Thanks. You can proceed.
Okay, I don't know if it's better now.
Yes, much better.
Okay. So one of how we as AFIC look into going forward now that we are live and we've launched is, one, we're looking into building legitimacy as AFIC. I mean, as you mentioned, there are several boards out there about fintechs, but one of the things is we want to be seen as the recognized body for any financial technology company that can come in, can raise concerns or have issues that, have rest and, come together and build legitimacy around that. The other is building partnerships through collaborations with as government bodies, private sector, other fintechs within Africa and also around the world. And lastly, we are also looking at growing membership. For fintechs, any new fintech coming in or anyone who wants to, the current fintechs in the market, they can come to us and we can have them registered and we can work together. Over to you.
Okay. So I don't know whether this is public information, but how much do you charge per membership? If it's not public information, you don't have to answer that.
Okay, Harry, this is something honestly, like Marietta mentioned, our focus is mostly about encouraging people to join us, to come and push this agenda with us. Obviously, there will be some fee around membership. However, we haven't really drilled down to the numbers. More importantly, we like to get the train out of the station. And that's what we're doing with you here today. That's what we're trying to do with the tech community. I think let's get the train out of the station first, and then let's talk about the membership fee.
Okay, fair enough. Sometimes we also build products, then we don't know how much to charge. Then we go to a customer, and we tell them, how much
do you want to pay for this?
Yeah, we do that a lot. But that's okay. To me, really, this is something really noble. I think it's something that anybody who is in the fintech space and creating value around the fintech space should engage with the association. The more people join, then you have a stronger voice. Then you're able to lobby for you'll be able to lobby for whatever policies that need to be in place, and they also engage in regulation so that you protect your members and all that.
Correct.
But this can only happen if there's actually a constituency, because what you guys are doing now is creating a constituency.
Exactly.
So when you go to whoever it is, CA, central bank, market authorities, you're going there as representatives of a constituency. So that's really it's a bottom line.
Absolutely.
Yeah.
Absolutely.
So guys, should we just launch this thing?
Let's do that.
Yeah.
Let's do that.
Let's do this.
Do that.
Let's launch it. Let's launch it. Hey, director, let's launch this thing. Let's launch it.
Let's do that, Harry.
Who's the
What do you
director?
say, guys?
Yes.
Where's Laura?
Let's do this.
Hurry up.
There you go, guys. There you go. The AFIC is launched. I encourage you to reach out to the team. You've seen them here. You know them. So engage with them. Be a member of AFIC. And let's build a really robust fintech movement in East Africa. So from studio with Mr. Ali Hussein, we say kwaheri sana and enjoy the rest of the sessions.
Thank you, Harry, for hosting us.
Thank you,
Much
Harry.
appreciated.
Thank you, Ali.
Thank you.
Thank you.
Right.
Bye.
Harry, thank you for driving this conversation with the Association of Fintechs in Kenya. To Ali and his team, we expect great things from you. Better engagement with government, regulators, and among sector players. An obvious next step is to explore collaboration across board, and Michelle Hassan, Kenya Country Manager at the Catalyst Fund, is standing by. Fintech is fast becoming a global phenomenon, led by innovators such as Michelle. The pandemic has accelerated many industries, including finance, and the emerging trends in the fintech space are changing the way technology is consumed. Michelle is an experienced financial inclusion specialist with over 10 years working alongside development finance institutions, banks, and startups to understand low-income consumers and develop products designed to meet their needs. Lend her your ears as she speaks to us on enhancing collaboration in FSI systems. Michelle, over to you.
Hi everyone, my name is Michelle Hassan. I am the Kenya Country Manager for Catalyst Fund, which is powered by BFA Global. I have been in the financial inclusion space for the last 10 years and excited to be here today to talk about fintechs and how to enhance collaboration in the financial sector industry. So what is Catalyst Fund? So Catalyst Fund is an inclusive tech accelerator that supports early stage startups in emerging markets, and especially bringing solutions to serve the underserved communities and developing innovation ecosystem in emerging markets. We are in 5 countries right now, with Kenya, South Africa, and Nigeria as part of Africa, and Mexico and India as well. So in the last 5 years, Catalyst has accelerated 45 startups. And as you can see, majority of them are in Africa. Quite a number, actually, about 9 in Kenya. Really interesting fintech that we've seen, and it ranges from everything from insurtech solutions to remittances to MSMEs products as well, and a couple of SaaS and like B2B partners as well. Recently, we launched a report with Brighter Bridges to just look at the fintech landscape in all the emerging markets. And this is one of the graphs we can see from the report, highlighting some of the things we're seeing: a lot of payments company, a lot of credit solutions, but also we're seeing things coming up like insurtech as well. So I think probably you might need to zoom in to see a lot of these companies, but it's kind of less interesting to just see what's happening there. And in this region, especially in Africa, we've seen that payment still is a higher kind of product, which is mostly funded. The last couple of years, we've seen InterSwitch being one of them that has highlighted and gotten some money, Cellulant as well. And still a lot more companies are coming in to just support that Flutterwave, showing that still payments is a key thing within the region, but also most of the funded products include kind of credit, and it's also we're seeing an increase in insurance. Recently, we've seen Lami in Kenya actually fundraising a bit of money as well. So I want to also talk about something that's really passionate for me, like what's the future for kind of fintechs? And for us as Catalyst Fund, and also as for me, I'm thinking about embedded finance as the future. I think there's still an opportunity for us to able to serve the underserved communities through this model. And why are we saying that? I think one, this is the right opportunity because there has been an increasing integration and partnerships via APIs. It's not as like a couple of years ago that it was hard to negotiate with institutions and being able to say, can I plug in and everything? But now we're seeing an opportunity of easy integration through different APIs. We can talk about M-Pesa API and all those things we've seen has helped a lot of institutions in kind of finding out what's the best way to get more information. We've seen a rising mobile payments account ownership within the countries, increase, I think from JCMA report shows it's still increasing, right? The latest FinScope or FinAccess study for Kenya shows, I think over 80% of Kenya still have mobile money accounts. We're seeing a rise in smartphone penetration as compared to a couple of years ago. And I think this has been an opportunity for the tech companies coming into Kenya and offering affordable smartphone solutions. A couple of years ago, it would have been really expensive to get a smartphone, but now we're seeing smartphones for about even $30 to $40 being in the market. So increasing the opportunity for more people to access apps. Also, I think we've seen an ability now to access more and diverse data sources. So not only just transactions, but looking at behavioral data. In the ag sector, looking at weather-based indicators and being able to actually collect that and able to see what's the risk value of these farmers to be able to actually do that. We've seen, like with credit lenders, looking through being able to look at someone's phone and looking at text messages, looking at social media accounts. All these have created more and more data, and people are able to know who their customers are. And I think this is an opportunity of saying, apart from transaction, what else can we actually start seeing and be able to profile a customer? And I think we live in a country that I think kind of is innovative in terms of regulatory regimes. We've seen now recently they've launched the data protection query to just see how we're able to do that. But also there has been a lot of discussions on how best can we be able to move forward and able to create more innovative sectors. We've seen with kind of the Central Bank of Kenya having the the hackathons, the Afro-Asia Fintech festivals, to just kind of bringing more and more people within the sector together to be able to create an opportunity for discussion as well. So some of the examples we've seen within, especially Kenya, is one, Lami, which I've mentioned before. It is an AI that's a platform that actually enables variety of businesses, and this includes from banks to tech companies to integrate tailored insurance offering to their existing products and services. And it offers a really, really optimal user experience via partners. And in the meantime, also kind of providing seamless underwriting and claims management on the back end. So making it easier for banks and institutions to offer insurance products within that ecosystem. Another one that I find really interesting is Pula, in the ag sector. Pula is actually able to reach the rural smallholders farmers and looking at kind of parametric insurance products. And that's basically due to embedded fintech innovation. So kind of some of the solutions we have is, or they're using is like remote data collection, advanced data analytics, looking at machine learning, and based on that, being able to assess a farmer's risk and exposure. And what's interesting, like once they have a case, they're able to actually be paying out directly to their mobile money account. This shows like how a whole ecosystem can play together to actually reach the underserved community in case of such an event occurs. So next, I'm going to talk about fintech corporate partnerships, and especially what we are seeing in the sector. We've seen a couple of kind of 3 different types of partnerships where a startup is partnering with a corporate. We've also seen in terms of partnerships of a startup, actually a smaller startup partnering with a bigger startup and saying, how else can we work together? And of course, the other partnership we're seeing is kind of more the embedded finance, which I've talked about. I think for us, the key question is, what actually does it take for a startup to actually partner with a financial institution? Through our circle of corporates, events, and everything, we've been talking to a lot of startups and the institutions themselves to understand what the challenges they have been. And some of the things we keep hearing is, if you want to actually partner with a financial institution, you need to actually have a clear value proposition and offer to the corporate. And it can be something, 3 key things we keep hearing is like, are you able to give us access to a market we're currently not serving? Are you able to increase efficiency of our either in-house products and everything? And are you able to actually reduce friction? So as a startup, when talking to an FSI, you actually have to talk to specific needs and what their pain points are. The other thing I think a lot of corporates were worried about is like, does the startup have a technical capacity? And it can be in 2 things, right? Technical capacity in terms of, do you have the tech knowledge to be able to do the integrations and the system itself? But second, do you actually have the capacity to service the corporate needs? And this will be like, do you have a team? So corporates are more hesitant to talk to a 1-man show or even a 2-man show, but more so like, if there's a challenge within maybe in the integration or serving the customers, is the startup able to come in and solve that problem as quickly as possible, because there's still a reputational risk. The third thing as well is, I think it's appreciating the risk landscape for financial institutions. And this, I think some startups think like it's immediate to kind of just do a partnership with an institution, but we're like, no, the risk is still there. And what a lot of corporate institutions look at is like, okay, are you in compliance? Do you have the legal documents to actually operate? Do you have the right licenses? I know a couple of people talking about like, do you have the no objection letter from the central bank? Are you able not to close up shop the next day, but able actually to help? But also like, how's your consumer protection guidelines? How are you keeping the data? How do you make sure that you're protecting the data that you might actually have access to from the corporate? I think the other key learning lessons we've been talking to our startups is just kind of understanding the corporate governance structure within an organization. not just assume as a startup that you know everything and you're able to go through, understand what's the right place to get into it. Is it through the digital transformation team? Is it through the retail? Is it through the actually supply side? But confirming exactly, understanding the whole corporate governance and what's needed and the approval that's needed. So kind of one of the things we do in our interaction with institutions through our circle of corporates is actually understanding this whole journey, the customer journey of a startup. And that we kind of share with some of our institutions and startups, telling them this is how long it's going to take. It doesn't mean that if you talk to one person and they say yes, it means the whole institutions have said yes. There's still approval processes that still needs to go through in the corporate itself. I think what we are seeing is if you find an innovation champion within a corporate, then the partnership discussion becomes easier. And especially if that innovation champion is within the management level, then it is easier to actually have conversation and have somebody to kind of push you, but also talk about you in different places within the organization to actually come. And then able to integrate seamlessly, with partners' existing IT system. So what value our corporates actually can derive from startup partnership? I think looking at last mile distribution, startups are able to be the closest to the underserved consumers. For example, like rural agriculture, being able to do that. Startups are agile. Now we've seen Safaricom trying to also build up that whole agile mentality within with their company. So it shows it's important actually to just see that as an opportunity. Startups are able to increase visibility of customers through dashboards, offering kind of like a 360 overview of customers, accessing data points to assist behavioral patterns, but also they have access to innovation trends. They're part of mostly of accelerators or bigger ecosystem that they're able to get new information and the current thinking of things that can be useful for startups. And also sharing that kind of the smaller tier banks can provide holistic solutions kind of through partnerships. This is one example we have for one of our companies called SocoWatch, and they're working with FMCG companies, being able to support them and having more information on how can a duka owner, a shop kiosk owner, be able to get more information or actually more data and more stock through an app. So finally, how do you actually enhance collaboration? One, I think creating forums like this for discussions and encouragement for people to actually have both from the fintech side, but also from the financial sector services, sitting down together and talking and knowing what's actually happening. Understanding the needs of both fintechs and financial institutions. So having those partner discussions is really important. And I think this is where ecosystem players like ourselves and actually other accelerator programs can come in and start having these partnership discussions with both the startups and the financial institutions. But more importantly is, how do you de-risk startups so that they're able to partner with financial institutions? And this can be either through accelerator programs, giving them enough funding so that they're able to actually support, but more importantly, upskilling the team so that they're able to cater for the needs of the financial institution and supporting that so that it's a successful either proof of concept or being able to do a great partnerships. So I think there's a whole opportunity where ecosystem players can actually play around this, and I'm glad I'm part of it and hoping that we're going to get more into this sector as well. So thank you so much, and I'm looking forward to the next discussion.
I've known you from the very beginning, watched as you started exploring the world. When you first felt that feeling of wonder, I was there when you went from growing your knowledge to sharing it with the world. I was there to make sure you were safe. When you found your forever love and looked on as life drew full circle. I've been there all along, and I always will be.
It's great to be back, guys. Ken Joroge just shared some 5 insightful tips on innovating for payments in Africa. And he's also penned down some interesting thoughts, dubbed Jumping Off the Lion, documenting his 18-year journey, taking Cellion from a startup to the point that he's now exited as CEO and gone onto a board role. We've seen Ali and his team at the Association of Fintechs in Kenya going live. It is important that we come together and move together as one combined force if we desire to see continued innovation in the sector. We're still on the collaboration track, and Anita is on standby to facilitate another panel. For those joining us on the online stream, I don't have your details. I can't see your particulars. Kindly send an email to events@cio.co.ke to be able to get the recording from day 1 and also day 2 as soon as we are done. Remember, if you're on the online platform streaming from the CIO website, do send us an email at events@cio.co.ke to make sure that you can get the recordings for both days. Let me let Anita get on stage and walk us through another session on collaboration. Partnerships between financial services firms and new startups have become an important way to drive innovation and deliver more efficient and effective future of finance. Our next panel with Anita will discuss some of the challenges in bringing collaborative innovations to market, including where firms practice and some existing frameworks and challenges. Anita is an experienced project management expert with a bias building and implementing digital products and services, with a demonstrated history of working in the financial services industry. Skilled in digital strategy development and execution, product development, digital marketing, DevOps, team management and leadership, she is a strong product development and delivery professional with a Master of Science focused in organizational development from USIU. She's also completed coursework in digital disruption strategies from the University of Cambridge, Judge Business School. Anita, take it away.
Good morning, all. So glad to have you all watching us from wherever you are. Karibuni sana. So today I have an interesting panel. We'll be discussing FSI collaboration to serve more customers. I liked Michelle's presentation on this, so we'll just continue the discussion with a few more panelists who are about to join us. All right. Good morning, all. Good morning. Nice to see you all. Looking all colorful, Shiko. Michelle, thank you so much for your presentation this morning. It was quite enlightening. And I think we'll just piggyback on your presentation to discuss this very hot topic about collaboration between FSI players. But before we get into the discussion, I'll allow us to introduce ourselves and what we do. So I'll start with Shiko. Karibu.
Asante, can you hear me?
Yes.
Oh, okay. Thank you.
Shiko,
can
we can hear you.
You can hear me? Okay.
Yes.
Thank you very much for being here. I'm really excited about this. I loved Michelle's conversation, especially about embedded finance, which is something I've been campaigning about for a while. So I'm really, really excited. Thank you.
All right. Thank you, Shiko. I'll have Fernando introduce yourself. Welcome.
Hello, good morning, everyone. First of all, thank you for the invitation. It's a pleasure to be here. This partnership topic is something very close to my heart because I like to say that I'm bilingual. I speak both corporate and startup, so this is a quite exciting topic for me. Thank you very much.
Thank you, Fernando. I'll have Tejal. Dave, introduce yourself. Thank you. Welcome.
Good morning, all, and thank you very much for the invitation. I'm really excited to have a candid discussion with the team and the panelists. So thank you very much.
Thank you, Tejal. And finally, Michelle, I know we just watched your presentation, but for the sake of the panel, just introduce.
Sure. My name is Michelle Hassan. I am the Kenya Country Manager for Catalyst Fund. This, I think, is a topic that is very close to my heart. So excited to be here and continuing that conversation.
And I think I'm very excited to see you, Michelle. We engaged in a couple of sessions, I think in 2019 before the pandemic. And I'm very happy to continue the conversation. And just from your presentation, I'll just start with you in terms of, I think you spoke a lot about the challenges a lot of innovators are having in the tech space. So what are some of the things that the Catalyst Fund is doing to close these gaps for the tech startups in terms of collaboration?
Yeah, I think that's an interesting question. When we started Catalyst Fund, we realized immediately like this is a challenge. Like, how do innovators go to scale? They need the partnership level, but also the partners and the corporates within the sector were like, where are the startups? We don't know them. So what we ended up doing as Catalyst Fund is try to kind of link the two together. So having discussions with corporates to find out what the needs are. And I think, Anita, we've had several conversations about this, like what challenges have you faced? What do you actually want in that ecosystem to understand the challenges, but also trying to match them up with some of the startups within our portfolio. So if you come to us and say, here's the challenges we have, we take you through our diagnostic workshop as a corporate, identify the needs and see who is within, especially within our portfolio, who can support your needs. Because that's still a question, like what value prop can we be able to support the corporate with?
All right, I like that approach. And I think that the whole discussion around collaboration is more to create value for customers and improve the experience that they have on their different digital channels that FSIs provide. And some interesting statistics I got from an essay report, especially around the pandemic, is that, especially on that market, is that the online payment grew by 400% between April and March of last year. And of course, this is orchestrated by the pandemic. So my question would be to Shiko, what does Color do, especially in terms of this collaboration, and how are we seeing the customer behavior changing, especially orchestrated by the pandemic? And what are those things, that areas of use cases that you've seen in collaboration during this particular pandemic?
Thank you so much for that question. So Color is a digital innovation lab. Our goal is to catalyze Africa. So we work with both corporates and startups to help them in their innovation and digital transformation journey. We have this slide when we are pitching where it's a quote from Satya Nadella's book, and it says that every company is a software company. And it's a quote that was borrowed from another person in the 80s. And what we are telling everybody, and when we started just before the pandemic, and would go and what is it called, and pitch and say, guys, we are actually going to have a transformation. You have to think like a software company. Of working have to be like a software company. You have to be agile. You have to do all these things like Netflix does, no matter what industry you are in. Even if you're selling cups and spoons, you have to still think about your data. Who is your customer? How many spoons do they need? How many people are in their family? So you can be able to upsell for them. And I mean, it took time. And I mean, you try not to get discouraged because you're selling something that people don't understand. And then the pandemic hit. The best thing that the president ever did to my career is say, we encourage people to work from home. And you know what happened? Everybody was like, what? So people are calling me and saying, so Shiko, you talked about that digital thing. So help us start with how do we enable our teams to work from home? And then how seeing that what's his name? I think he said, I've forgotten his name. He said he's duolingual, he's startup and corporate. I'm a recovering corporate executive. So it was like calling me and saying, can you speak to us startup? Come and speak to us how to make sure that our teams are productive. In my previous life, I was running a startup within a corporation, and we had this like pseudo lifestyle and culture where we worked from home, we had flexible hours, we had working from home and working culture was not new for us. So when people are asking, how do you make sure people are working? Because people believe that when I check in at 8 o'clock and check out at 5 o'clock, that's the time that I am. That how do you measure productivity in a remote sense? So it starts with understanding that we are not that different, yeah. And in this world, we all need the same things, and helping corporates understand that, okay, don't dismiss startups to offer for you ways of working, agility, being able to go to market fast, taking risks really fast. And that's when I'm working with corporates, that's the biggest angle that we have seen. We have seen that it's not that they don't know, it is a holder responsibility. If anything goes wrong, it's on my neck. How do I cushion myself from that risk? And so for me, that has been one of the biggest things. So what we've been doing as Carla, we've been saying, we are going to be your scapegoat. We come in, we organize a workshop with you. We prioritize top 2 or 3 things that are going to give you immediate business value. Because in startups, we have this, like, in a year's time, in 18 months' time, we are going to be able to see results. Corporate does not have that. Corporate can only say, what am I going to show for this quarter? Yeah. What am I able to show for this quarter? And as somebody who is helping corporate, agile, and somebody help this, how do I help you show something for this quarter? And that's what startups should be able to help them do.
All right. Thank you, Shiko. Thank you, Shiko, for that elaborate and very insightful response, and especially where Carla comes in to assist this FSI in the different market segments. So my next question would be to Tejal, my fellow banker on the panel. So how do you think financial services can improve customer experience in the long term and create greater value, customer value? So we've seen a lot of FSI players, launching a lot of digital channels, improved mobile banking proposition for their customers, improved use cases on internet banking. But how can we continue to create and improve these experiences for greater value for the customer as well as for the organization?
Thank you for that. Yes. For us to be, as a financial institution, for us to ensure that we have 360 degrees with one customer, we have to ensure that we give products and services across the board. So whether it's the normal products that we're doing, within the institution, or we're now enhancing our digital platforms to be able to give, savings products to our customer. So every offer, we have to innovate. And, especially today when a lot of customers do not want to visit branches, but they want, information at their fingertips. They want to know from the relationship managers, what is it that they can do to save? So we just have to ensure that we have product innovation, leverage on technology. We need to ensure that, we're not just a banker, but we are a trusted advisor to whether it's an individual or to a business. How can we assist the business to grow, to assist them in their day-to-day business, give them solutions? Every customer is different. So, we have to understand, do we understand our customers? And remember, a happy customer is a loyal customer. He will give you referral business. He will do so much more with you. Today, maybe your revenues, maybe you're earning maybe 10% from that customer. But over the years, are you growing as a financial institution? Is your revenues growing with that one customer? Because you're helping him give or her, you're giving them solutions. So that's what I would say. Thank you.
And how is SBM collaborating? Do you have any collaboration use cases that you can speak about?
At the moment, we're looking at future partnerships, but right now we're just ensuring that we improve on our digital platforms. We be if we have if for example if maybe one area is not working, what are the other solutions? We take that opportunity to introduce another product, that can assist us. For example, use SPS portals to introduce M-Pesa services, that customers even abroad, it doesn't have to be Kenyans, the customers in Kenya, but even customers abroad can start using that service. So we, in time, we'll be able to say that we have to go the partnership way, because you cannot just be a traditional bank.
Yeah.
So yes,
Okay, thank you, Tejal. So to the only gentleman on the panel, you're a very lucky man this morning. So you've said you're multilingual. So I wanted you to share your experiences on how collaboration looks in other markets. I think the three ladies here are skewed because we are all in East Africa, but how does it look in the places that you've been or you've worked and the companies that you've engaged?
Thank you very much. Once again, it's an honor to be here. I think the challenges I've been seeing in other markets where I've been operating are pretty much the same challenges that we have in East Africa and across Africa, right? When we talk about these partnerships between these startups and incumbent banks, right? As we mentioned already, I guess Michelle mentioned in her keynote opening, there's a lot of things around the size, right? The culture. I think that's the key challenge that we see here, right? So we have these nimble startups coming in, right? Very agile, with different ways of working and trying to navigate through the corporate bureaucracy and structures and all that. I think that's one of the challenges, and I think we need to go back to why we need these relationships, right? It has to be a win-win situation here, right? From the startups, of course, they want to tap into a larger market, and a way to do that is through these big corporates, so they can tap into these big corporates' data and customers, so to speak, and even turning these corporates into customers. That's a perspective. And of course, from the bank's perspective, they want to partner with these fintechs or startups to experiment, right? To bring new technology, to address new verticals, to being closer to different customer segments that they're not targeting right now. And of course, being more agile and of course, accelerate innovation. So we've been seeing a lot of challenges, as I mentioned before, especially around these big corporates understanding the startups, how the startups work. And what I've been seeing in different markets as well is that a lot of the times these big corporates, they partner with the startups and then they kill these startups, right, in terms of their bureaucracy. So it's quite important to have the right level of buy-in and strategic buy-in from the big corporates and respect the startup size and the way they operate. And at the same time, for the startups, it's quite important to understand the big corporate structures, bureaucracy, the procurement process, governance, compliance, and so on, to make sure that they comply and they can create a win-win relationship here.
Thank you, Fernando. And I think that sits mark in the middle of what Michelle does, because I think the Catalyst Fund is all about assisting these startups being able to be viable in a way that financial institutions can collaborate with them. And my next question is to you, Michelle. What are the key challenges that these tech innovators are having, because any collaboration for a financial institution has to be commercially viable? So how then do we close the gap of just not building products or services that are not commercially viable? And how is the Catalyst Fund assisting with this?
So one of the things we kept on hearing from our startups and also the incumbents, like, how do you speak the language of an FSI? So a lot of startups come in, they have a tech background, but now you have to start talking to an organization that has bureaucracy, it has all these things, it has all those legal things. How do you able to do that? So Catalyst Fund, we started talking to discussion with the startups on how do you do B2B sales? How do you start talking the language of the corporate so you're able to actually get your foot in the door because people in the corporate world, people might not understand the tech things, but like, what's the value are you bringing to us? How are you able to explain it in simple terms of, this is how much money you're going to make with this partnership. This is how much customers you're going to be able to access. So just changing that, because the conversation between a startup and investor and set up a corporate are quite different. So what we've been trying to do is separate and show them these are complete two different conversations and how to deal with it. Another thing also is we've been telling the startup is like, start early. Runway is important, but also like it's going to take a long time to actually get these partnerships. How do you get the right individual within that institution to come in and be your champion, but also that understanding it's going to take a longer time? How do you start that conversation early enough to give yourself time to understand the institution, but also to be able to give value in terms of, here's the value proposition. I know a lot of startups come in and say, oh, yes, I have customers, but then what? I think that's to be much more in terms of, what pain point are you solving for the FSI? Is it access to a different market than what they have? Is it increasing efficiency? I think SBM have talked about the customer itself, like what value are you bringing to the customer of the FSI? And that's important. And I guess also, regulation as well is key. Make sure that you have the right regulation to be able to partner with an FSI.
Okay, thank you so much for that. And now that we're talking about the whole collaboration aspect, and we've seen a lot of collaboration with FSIs in Kenya with, of course, M-Pesa. And I just want us to, your thoughts around this, whether, is there a future for FSIs without M-Pesa? Because you've seen a lot of banks, riding on the M-Pesa use case for the different services that they offer their customers. So I'll start with Fernando, and I'm sure you know of M-Pesa being multilingual. Do you think there is a future without M-Pesa in this side of the world?
Of course, I know about M-Pesa, because M-Pesa has been a big inspiration for financial services across the world. It's just an African use case, right? I think M-Pesa is a reference across the world on how we can create these services that are really relevant to customers, right? So I would say, in my perspective, there's not a future in financial services without M-Pesa, just because M-Pesa has been inspiring not only the fintechs, but the banks as well. The banks are looking at what M-Pesa is doing across the continent, right? So just to say that there's not future of financial service without M-Pesa, in my perspective.
Thank you, Shiko. Your take? Sorry, we can't hear you, Shiko.
Now you can hear me, right?
Yeah.
Okay. So you are putting me in a very having worked on M-Pesa and having worked on non-M-Pesa technology. So there are two ways of thinking about it when you think about M-Pesa. Think of M-Pesa as an inspirational, foundational technology. That's what is possible. Yeah. So I think there's future of financial services without M-Pesa in its current state. And note that it's not, M-Pesa in its current state is going to be obsolete very soon. M-Pesa continues innovating on itself and adapting new technologies and rethinking how it can be in the future. It's going to outlive and be able to continue being an inspiration to everybody. Yeah, state as a technology and as a business model, somebody is going to come and disrupt it. Michelle talked about embedded financing. It's something that is being experimented across the world. So, unless M-Pesa changes, that is going to disrupt how it's going to be, because it's going to be one of the main things that is going to be part of the embedded financing. Yeah, it's not going to be unique as it is right now. So my answer, M-Pesa in its current state might not be needed in the future, but if they continue innovating, they will.
Okay, thank you. Tejal, 1 minute or just to respond to that.
At the moment, M-Pesa, you need M-Pesa all the time. But I'm sure in the near future, yes, there will be other solutions,
Okay.
which a lot of people will come up with. Thank you.
Okay, thank you, Tejal. Michelle, 10 seconds on that.
No, I think I agree with Shiko. Like future-wise, M-Pesa will just be one of the products. I think more and more people are innovating in a world without M-Pesa. So we'll see interesting things coming up.
Great. So our session is about to end. I'll just request us to just give us a parting shot in regard to what we've discussed. Then we can close. So I'll start with Fernando. Your parting shot?
Yeah, so just to say that this topic is quite relevant. I think when we talk about the future of financials, we need to understand once again what these partnerships mean, and we touch on that in different perspectives, right? So it's quite important once again for the big corporates to understand these startups, understand how to work with them, how to maximize their value, right? And it's important for startups as well to make themselves relevant for these partnerships. So I think these partnerships conversation is becoming a top item in every agenda of any corporate, because that's the way, that's one of the best ways to accelerate growth and innovation.
Okay, thank you. Tejal, your parting shot?
Just to mention that financial institutions, to go forward in the near future, they will have to do partnerships. Without collaborations, it won't be, I think bank would be boring. So we need to look at partnerships. So thank you.
Thank you. Michelle, parting shot?
Yeah, I think there is value for the right partnerships between incumbents and fintechs. And I think there's a role to play for ecosystem players. And I think AFIC can be an important player right now in this space.
Thank you, Michelle. Shiko, parting shot? Sorry, we can't hear you.
Sorry, can you hear me now?
Yeah.
So there's something Michelle said that I just want to reiterate, having been doing this corporate startup thing for a while now, is that when a startup goes to a corporate, you have to have clear value. And that clear value has to be differentiated from what they already do, what they already know. You have to show them that it's not about cash in, cash out. It's not about lending or credit. What else are you bringing on the table that will meet their current need? Yes, 18 months from now is great for them, but show them what is my low-hanging fruit. That snowball effect will be to my shareholders, to my bottom line, and to my customer. Okay. And then you look out 18 months and say, this is 3 months, 6 months, 18 months. Thank you very much.
Okay. Thank you so much, Shiko. Thank you guys for your awesome insights on this particular topic. And as we close, remember all the collaboration that we are doing is to give customers value in all the services that we're giving. And let's collaborate. Thank you.
Businesses are rapidly adopting cloud computing, taking advantage of its flexibility and speed. Whether consuming SaaS applications, building cloud-native applications, or migrating existing applications to the cloud, finding a security solution that addresses a diverse set of needs is critical. Fortinet Cloud Security Solutions deliver. Get the confidence you need to deploy any application on any cloud supporting any initiative. Fortinet supports all major cloud providers, ensuring that critical assets are secure and that security is manageable. The Fortinet 3-pillar cloud security strategy provides the same level of security across multiple clouds by natively integrating security into the cloud platform, defining security policies for cloud services, and leveraging cloud services for security, ultimately enabling automation of security services. Fortinet provides the industry's broadest set of cloud security products, enabling you to use the same security in the cloud as you have on premises. By using purpose-built security tools in the cloud, you'll save time by leveraging existing skill sets. By managing security across multiple clouds through a single pane of glass, and by automating the security lifecycle management, you can better leverage existing skill sets and accelerate the confidence to deploy applications anywhere. From consuming cloud applications to building applications in the cloud and migrating IT to the cloud, Fortinet Cloud Security Solutions cover the broadest set of use cases, delivering the flexibility and confidence to use the cloud in a way that best serves your business.
Thank you for a pithy session, Anita. From strategy, we move swiftly into compliance and regulation. Where value is created, it is expected that in due course, regulators will come calling. It's great that the Association of Fintechs in Kenya is now live. So we need to start asking important questions such as, who is best at regulating fintechs? Stephen Maura, chairman and founder of the Fintech Institute, will share his thoughts on the spectrum of possible mandate holders. Stephen was part of the inner circle that birthed the idea, implementation, and facilitation of Kenya's most successful mobile payment platform, a platform that has gained recognition the world over. He is an international consultant with broad experience with over 25 years in digital financial services, payment systems, central banking practices, legal and regulatory frameworks. Stephen, the stage is yours.
Good morning, the CIO, director, and management, all the members who have come to this great forum, Fintech Summit. Good morning. I am happy to be requested to present on the subject of who is the best at regulating fintech. Before I do that, allow me to observe that we are dealing with the COVID period, and we have to remember those who have lost their loved ones, those who have been affected in many ways, jobs, etc., and pray God to give us solutions to this pandemic. Having said that, allow me to introduce myself. My name is Stephen Maura Duati, chairman and founder of Fintech Institute. We deal with capacity building. I worked for the central bank for over 30 years. The last station was the head of the national payment system when we developed very many products and we supported the industry with the enabling regulation. The most famous of it is mobile financial services, which put Kenya on the world map. So as we approach this topic of fintechs, appreciate that I was the head in terms of legal frameworks for the area of financial technology or digital financial services. This morning, I also want to tell us that I started as an engineer, mechanical, worked with the government. I went to the US and did an MBA. And from the US, I also worked in a commercial bank as an IT auditor before coming to join the Central Bank of Kenya. I have also done law and have been a particular student of law and development. If you could allow me to move on, the agenda is very simple. What is the overall goal? I mean, when we talk about regulation, we have to appreciate what is the overall goal. In my opinion, sustainable financial inclusion is the overall goal. Then you can ask the question, what are fintechs? And what are the opportunities and risks? And I would come back to tell us what is happening globally, IMF, World Bank, and finally talk about enabling regulatory framework. Goal setting, I have given you the river Sagana, which you are familiar with, and I tell us that when people who have lived between these bridges for many years, their interest was to cross the river from one side to the other. They must have been doing it many ways before this bridge was done. But when the engineers came to build this bridge, the overriding thing, and you can look at the raging water there, the overriding thing is safety, despite all the things that are happening there. In the same manner, when we are dealing with fintechs, appreciate that what we are really talking about is delivery of financial services from the provider to the consumer in a safe manner. Whether you introduce regulations, they are not regulations to hinder you from moving from one side to the other. They are regulations to facilitate you move from one side to the other. Moving on, what is financial inclusion? Financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs. These sequentially follow the pattern of first and foremost payments. Payments for the longest had not been incorporated in central banking thinking until 1990s, when there was a crisis in Southeast Asia, or the Asia problems, Asia tigers, and it was realized that payments can cause financial instability. So the reason why central banks came into dealing with payments was more about stability. And the same reason should be appreciated when we are dealing with fintechs. Then, of course, transactions, which banking has done for many years, savings, credit, and insurance. Look at that, what we define as financial product, and you realize that it is not one industry. There are many industries. There is banking, there is SACCOs, there is insurance, there is regulatory RBAs and what have you, and therefore we cannot talk of one size fits all for fintechs when we appreciate that financial inclusion is much broader. Why financial inclusion? Financial inclusion is becoming a priority for policymakers, regulators, and development agencies globally. It has been identified as an enabler for 7 of the 17 Sustainable Development Goals. The G20 committed to advance financial inclusion worldwide and reaffirmed its commitment to implement the G20 high-level principles for digital financial inclusion. So fintech is part of that commitment. And then we are also talking about universal access, which was supposed to be reached by year 2020. But yes, Corona has done a lot of bad things and negative things. But there is a silver lining because the use of digital financial services. We in Kenya are witnesses of how much we are using digital products across the board. And if we didn't have these digital channels, you can imagine what would be happening to this our great nation. Before we go very far, this diagram shows what was there before M-Pesa. And formal access to financial services in Kenya was at a pitiful 19% in the year 2006. The formal other SACCOs and MFIs, 8%. Informal, therefore, was 35%, and excluded completely was 38%. This is after banking for over 100 years. And for that reason, we have to appreciate that the models, the business models that were driven by brick and mortar, had to give way to a new way of providing financial or payment services. It is this diagram that defines what we are addressing this morning. The diagram appreciates that there are additive mobile phone models or additive fintech models, in which case commercial banks or any financial institution for that matter will be using technology to offer their financial services. It's called additive. We don't need any new regulation for that. Let me say it again. We don't need to write a new banking act or a new insurance act to deal with the institutions that have been there. What becomes more interesting, and that's what has changed Kenya, is what we call transformational, non-bank led. You remember we authorized the mobile network operators to provide the services, Akina Safaricom and Airtel and Telco. And it is through this channel of non-banks that we have seen magic. And it is the same thinking that we want to project out there to policymakers, to be able to reach to the unbanked and to be able to reach to them effectively and efficiently. We need to get out of the box of thinking that we are going to regulate the old way. So the question you asked me first, who is best? I am answering it here by saying we have to think beyond what we have today, and the current regulatory framework or regulatory institutions need to transform to think about the non-bank products and providers, and they need to think about new entities and new business models. Kenya was lucky, and this diagram has been shown to us many times. After we authorized mobile financial services, by 2016, access to financial services in Kenya were over 80%. So you can imagine now with this situation of COVID, you may even appreciate that we are approaching 90, purely approaching the first world. And we have to thank ourselves and thank our policymakers of yesterday and appreciate the policymakers of today should be aligned to think about providing transformational fintechs as we authorize transformational mobile financial services. Let me come back to a question which has been said beginning with yesterday. I know David and the other team members who spoke yesterday. We talk about what are a fintech. New technologies are the core of fintech. Technological innovation has made major inroads into financial services, especially payments. The pace of innovation has substantially increased in the past 5 years, leading to the era of fintech. Fintech is defined as, here I go very slowly, advances in technology that have the potential to transform the provision of financial services, spurring the development of new business models, applications, processes, and products. Advances in technology that have the potential. We can hinder this potential if we come up with prohibitive regulatory framework. And this is where we have been crying, even when we hear the central bank deal with, for example, digital letters. We never intended to regulate the digital channels. We are regulating the business of providing financial services. We are not regulating technology. Let me repeat that. We should avoid a situation where we regulate technology. We regulate the services. If it is savings, we deal with savings. If it's credit, we deal with credit. If it is payment, we deal with payment. If it is insurance, we deal with insurance. Let me here position myself and say the mistake Kenya can make is if we begin to regulate technology. Fintech presents both opportunities and challenges in improving access to and usage of safe transaction accounts. Fintech can be leveraged to improve the design of transaction accounts and payment products, make them ubiquitously accessible, enhance user experience and awareness, and achieve efficiency gains and lower market entry barriers. That is what we define fintech to be. There is a wheel here, which was done by the World Bank and the BIS, which talks about payment aspects of financial inclusion. And this fintech wheel is very, very important. We have products, we have technologies, and we have access nodes. But at the center there is a universal access to frequent usage of transaction account. That transaction account can either be a bank account, it can also be a mobile wallet, it can be anything, and this is where the magic begins. But surrounding it are the many technologies that people refer to as fintechs. And those are not the things we are going to regulate. We are only going to look at the services that are being offered. So we look at the products which we see from the outside. We have the traditional banking products, we have the traditional insurance products, which have to be digitized. And then we are talking about, especially in Europe and America, open banking. We also are talking about instant payments, super apps, stable coins, electronic wallets, and central bank digital currencies. These are all products, and there are many products issued by very many institutions. And those products remain the same products. So what is changing here is the channel between you and the customer. And this channel is not what you regulate. We have very good laws dealing with the digital issues. These laws include the cybercrime laws, we do have the data protection laws, and therefore we should not mess it up by bringing in an aspect of regulating digital. I may even say here, the recent thinking about digital headers. The fact that we are trying to define digital even in the Central Bank Act tells us we are beginning to move in the direction of regulating channels. Here we talk about application program APIs, we talk about big data, we talk about biometrics, we talk about cloud computing, contactless technologies, distributed ledger, digital IDs, Internet of Things, and it is this link between the customer that has changed the businesses. For example, we no longer talk about banking as an institution, we talk about banking as a service. We now talk about payments as a service. Again, we have to remember that globally we are competing for financing, and the fintech funding by region shows that Asia is receiving much more than Africa. Latin America is again receiving much better than Africa. Asia is the yellow, BRAC is Latin America. Africa has received very little in the way of digital or fintech funding. If we come up with regulations that hinder this funding, we'll be killing ourselves. And this is a mistake we don't want to make. I have an overview of the African fintech landscape, and I can tell us that 70% of the funding in fintechs is going to payments, 3% is going to investing, and 22% is going to other, 6% is going to financing. So we have benefited from payments, and we are now beginning the journey towards other types of fundings. And let us not write regulations to kill it. Let me tell us, if we try to regulate fintechs, we have over 100 or even 200 of them. If you told a central bank to regulate them, for example, you may end up, they have only regulated less than 50 institutions over many years. So if you ask them to begin to regulate this, we may never be able to even authorize them and license them. When we are asking about their capital, when we are asking about their governance, we will not. And for that reason, one of the points I want to underscore here is to ask ourselves to be very careful, because we are in a competitive world where we need to be receiving funding and investments, and we should not kill those people who want to invest in our economy through bad regulation. Business models are configuring in ways that challenge existing regulatory approaches. And there are 4 of them: new providers from outside the regulated sector, disaggregated and decomposed value chains, new products and services, hybrid business models. I don't want to discuss this because of time, and I want to tell us that a question I could ask is Safaricom a telco or a fintech service provider? Its revenue now is from M-Pesa. You can answer that question. There are opportunities. Fintechs offer ranging opportunities, those ones you have been told earlier, opportunities, but there are risks. At the same time, these benefits come with certain risks. And these are the risks that make us come up with regulatory frameworks. And I won't read through all the risks because they are the concern of various national authorities. But one thing I say is that there is need for international cooperation, and the World Bank has come up with the fintech agenda, which have appreciated that there are 12 things that we need to look at. 2 of them deal with the regulatory framework. And I could say we need to monitor developments closely. We need to develop regulatory frameworks that are enabling. And this chart of 12 is what we should appreciate, that the international community has come up with standards. The Financial Stability Board has standards. The BIS has come up with standards. The International Organization of Securities has come up with standards. International Association of Insurance has come up with standards, and the Financial Action Task Force has come up with standards. What I'm telling us before I come to the end of this presentation, there are risks that come with fintechs, but the international standard setting bodies have crafted regulatory frameworks or standards which we should incorporate in our regulations. Both the insurance regulator, the banking regulator, the capital markets regulator, the RBAs, they should incorporate these standards without necessarily coming up with technology-focused regulations. We should remain technology neutral. We should not allow ourselves to attempt to regulate technology. We should ask Treasury to set up a board, which board should look at all the holistic issues dealing with the regulatory areas, do enough research, and come up with ways of modernizing the regulations which are running commercial banks, so that the outsourcing of fintechs can be done in a safe manner to mitigate the various risks. With this, ladies and gentlemen, I want to appreciate that we have answered the question by saying not one single regulator, but modernizing the regulatory space to facilitate attraction for a country, investment, and allow our many employees. Today I saw ABSA has fired so many people. Standard Bank has fired so many people. Who do you think is going to absorb these people? It is the fintechs. And for that reason, I want to encourage us and encourage ourselves and ask that we as CIO and as all the communities who deal with fintechs, we avoid a situation where our country comes up with regulations that stifle innovations. Creating an enabling environment is our goal. And our goal is to provide financial inclusion to the many, financial inclusion to all the Kenyans. Finally, I asked the question, what is Safaricom? When they started, they were selling voice as a service. Today, they are dealing with mobile financial services. They are dealing with cross-border. They are dealing with Fuliza. They are dealing with KCB and PESA. What is equity? They are dealing with fintechs. What will happen in the future will depend on what we do with our regulations. Ladies and gentlemen, good morning. And I wish when we come to the questions, we can address the issue I didn't address exhaustively of risks. Have a good afternoon and an excellent workshop. Again, thank you for organizing this one. And we pray that we can, as a country, remain the hub of financial services through adoption of fintech technology without inhibiting it through regulations. Thank you.
Right this second, we're closer than ever. Whether we're spread across town, across Africa, or across an ocean, we're merely separated by a moment. In an instant, we can send support, feed a passion, or strengthen a bond. It's the connections between us that power Chipper Cash. As 1 million users on Chipper becomes millions, the possibilities for what we can achieve together are endless.
Thank you, Stephen. What many may not know is that Stephen is considered the father of M-Pesa. And there's a fantastic article on the CIO website where he gives us a behind-the-scenes look at the delicate dance that happened at the central bank as M-Pesa tried to find its footing. Make sure you read that on cio.co.ke. Well, today looks like a good day for questions, and our position 3. What is the role of regulations in catalyzing the growth of the fintech sector? How are today's regulations incentivizing or even influencing banks to cooperate with fintechs? Are fintechs all out to unbundle traditional banks? Nzilani Moyo will get us these answers. Nzilani is a lawyer specializing in technology, telecommunications law, and intellectual property. She advises on several things: data protection, regulatory and compliance issues, media law, cybercrime and security, fintech technology and telecommunication litigation, intellectual property law, corporate litigation, strategic partnerships, competition law and disputes, and alternative dispute resolution. RegTech and the challenge of regulation without slowing disruption. Anita, along with your solid panel, please get us the answers that we seek. Karibu.
Ladies and gentlemen, financial services have been disrupted. We have seen a real big growth with regard to fintechs in the last few years, and specifically in 2020, accelerated by COVID-19. What do we need to do to make sure that these services that are coming up every single day, that are attracting millions in investments, are not disrupted, are not slowed down, and are supported? With me today, we have a fantastic panel of 4 speakers. I will let them introduce themselves. We start with you, the only lady in the panel, Mutindi Mwema. Please go ahead.
Hi, good morning, everybody. My name is Mutindi, and I'm a Public Policy and Government Affairs Director at Oxygen MCL. I'm also an author, an advocate in the High Court of Kenya, and a certified information privacy manager. And I'm glad to be here. I've been working in the legal and regulatory space for the last 10 years.
Thank you, Mutindi. I request that you speak a little louder. We can barely hear you. I will go with you next,
sorry.
Stephen, even though people have spoken to you. You've spoken to people before, and they know who you are now. But please go ahead. Stephen.
Oh, good morning. My name is Stephen Maura Duaki. I've already been introduced, and somebody recently baptized me the father of M-Pesa. But basically, I want to say that I was the head of the national payment system in Kenya during the time when we really modernized our payment systems. Amongst them, we did the real-time cross-settlement system. And then together, we also looked at mobile digital financial services. Education-wise, I am an engineer. I have also got an MBA and in the United States. I also came and did LLB, and I have been studying LLM, where I believe in law and development. And therefore, when we are here, I believe we can look at the law and development as pertains to fintechs. Good morning.
Thank you, Stephen. Fahim, you're up next. Please introduce yourself. Sorry, Fahim, you're on mute. We can't hear you.
Yeah, please confirm you can hear me now.
Thank you, yes.
Yeah, hi everyone. This is Fahim. Thank you first of all for the CIOs East Africa. You have organized this wonderful event. It's really actually, innovative and wonderful event virtually where most of the people can actually learn and, and can join from across the world. My name is Fahim Ali, and I'm the expert in transformation and fintech. And also right now I'm working with Sony. I worked in Central Asia, Asia Pacific, and also West African countries. And right now I'm here in East African countries based in Kenya and Nairobi. Thank you.
Last but not least, Jerry, please go ahead and introduce yourself.
Good morning. Thank you very much for having me on this forum and to speak about this topic. My name is Jerry Shikule. I am the Global Sales and Origination Lead for Africa for TradeStream. And I am also a father of two boys. I have I've had the last 15 years, I've had the pleasure of working across Africa within the digital space, cutting across telecommunications and FSI, financial services. And I'm very happy to be on this forum. Thank you.
Thank you very much. I think we're in agreement that what we need is regulations that do not stifle innovation and that actually accelerate the growth of the industry. Right now, we have certain laws that are in place, but are they sufficient? Are they effective? Are they lagging behind? Steve, please go ahead and answer that question.
That's a very interesting question, because when I was confronted with the same issue when we were authorizing M-Pesa, the question was whether the laws were adequate. I would say that laws are never adequate. This is the reason why we keep reviewing them and adapting to new technology. When, for example, the laws on banking, insurance, and all those financial services were developed, they were developed during the paper days, and they were developed without necessarily appreciating the uptake of technology. So when we really talk about fintechs and we have explained what they are, we have already said that they will come with a provision of the same services. We still need banking, we still need insurance, we still need investments. Those remain basic. The question is, how are they going to be delivered? And all that fintechs are doing, they may look like they are magical, but the whole issue is the distance between the customer and the provider has changed. Equally, the number of providers has also changed. If we talk of a new provider, that's where now becomes interesting. When we authorized mobile digital financial services, we didn't go regulating what the banks were doing, purely because the Banking Act was competent to deal with banking issues, including the risk brought about by technology. But then we had a new player in the sense of the mobile network operators. And therefore, when we wrote the new NPS Act, we created a category of institutions called payment service providers. And this category is where you find the MNOs and any other provider who had not been catered for by law before. So when you ask me whether the laws are adequate, I would say yes, to the extent that they cater for banking business, insurance business, investment business. What does not cater for are the new players. And these are the ones which, when I talk, I say we need a very, very cleverly crafted regulation, not one which will stifle, not one which will protect the existing institutions so that we reduce competition, and not one which will not enhance efficiency and provision of services to especially the poor people, the people who are not being reached by the previous providers. In that regard,
I see a cry, for example, for digital providers like the digital leaders who have become the focus of government, and yet when you listen to the regulation they are formulating, it is to kill, not to promote. Good morning.
Thank you, Stephen. Jerry, as an expert on digitization, picking from what Jerry has just said with regard to what has happened to the digital lenders and what's happening to payment service providers in the market, what would be your thoughts around the regulations that we need to accelerate the growth of digital lenders, any other fintechs coming into the market, payment service providers? Yes.
Thank you, Zilani. We appreciate that technology actually precedes regulation in many instances. So, in this sense, to discuss this topic in its entirety, we need to look at how regulation is therefore catching up with this technology. We have had instances, for example, in the mid 2000s, Kenya was, and with, of course, with the help of my panelist Stephen here, Kenya was, moving very rapidly in the fintech space. The godfather or even the grandfather of fintech being M-Pesa. Sometimes central bank would allow certain transactions and operations that we had not seen in this part of the world to just carry on and self-regulate. But then over time, regulation then started coming in. One of the things that we have seen that has been improving regulation and even growth of fintechs across, and I will speak to Kenya. I'll also perhaps speak to other jurisdictions. Is, for example, the CMA, the Capital Markets Authority, put up a sandbox for fintechs to start testing the technology, and this really has been encouraging to a lot of the fintechs that have been operating in this space. And to grow these fintechs, for example, Safaricom has opened APIs, and there's also open banking. If you've heard of FinServe's Equity Bank related fintech, which has open banking and open APIs. These help mid-level and mid-size and even smaller fintechs to come in and plug in and provide these services. So this collaboration, actually, from a regulatory perspective, is very helpful to the fintechs in its entirety.
Thank you, Jerry. Fahim, you are an expert on inclusion. My question to you is, do you think that we currently have sufficient laws to cover inclusion, ensure there's financial inclusivity across the market? And what would be your recommendations with regard to what we need to do to ensure there's inclusivity?
Yeah, thank you. Yes, we do have the sufficient, regulation. For example, we do have the consumer protection sufficiently available. While the current law offers some protection and regulatory, guidance to the consumer and the market practices and the market practitioners, they do not, I believe, that adequately cover the legal issues in terms of that may arise. For example, in fintech products such as crowdfunding, blockchain technology, cryptocurrency, and again in all other areas. In Kenya, we definitely have the Data Privacy or Protection Act, and that is actually helping us a lot in the spotlighting so many areas of data protection and consumer protections and all that. But there is still need to be moved on to more implementation, strengthening on the regulation in this space. Also, I believe that the cybercrime laws also is something which may be more standard behavior of the ICTs and again the users to understand that how we need to do. It should be the beyond people, data, and system services and infrastructure. In particularly protecting the human rights particularly in the enabling the investigating and prosecutions again on the crimes committed. Like it's not should be like more of reporting, that okay, you can report, but after reporting, how the it sufficiently support you on the cyber crime areas, especially on the procedural areas, and the preventive laws areas, again on the future areas also. There are a number of institutions, they actually sometimes report, but again the consumer protections, if it is went bad, sometimes they don't report. Sometimes they report, but again they don't report the way it is actually affected. So it should be more addressed well, and again with the more enabling kind of thing, not maybe more of protecting and more of fighting and all that. It should be more of enabling, that how we can enable and move forward on this particular area. Thank you.
Thank you, Fahim. Mutindi, my fellow lawyer. I know you have expertise around data protection, and one of the things that has come up around the data protection regulations is the requirement to process data and store data in a local server in Kenya, particularly for payment service providers and for certain identified financial services. What are your thoughts around those regulations and generally the Data Protection Act with regard to accelerating growth in fintech?
That's a very good question. So maybe just begin with a disclaimer that the views I'm just about to give right now are mine and do not belong to any of my clients or the institution where I work. For the data protection draft regulations, because those are the general draft regulations that are still in draft right now and have not yet been passed, that requirement for data localization, I find it very interesting because it's almost like they're trying to do something without really doing it. So it's under the heading of data localization, which in essence would require that data sits in Kenya. But when you analyze the provision as given, it provides for either data to sit in Kenya at a data center in Kenya, or they have an or there that there is one serving copy in Kenya. Now, the concept of a serving copy again seems to allow cloud services to continue and for people to still have the data hosted outside. So to that extent, the draft regulation does not negatively impede business continuing within the financial services sector and even for fintechs, mainly because, of course, financial services is highly interconnected. Even if we go to the traditional providers like banks, most of them have banking networks that span across the entire globe. And so it would be almost hard or impossible to restrict data to be localized 100% and say that it can not in any circumstance sit within the cloud. And even looking further at it, you find most of the traditional financial providers have outsourced services to do with like their core banking system. They've outsourced storage services. You find that even for fintechs, most of the best cloud service providers are not Kenyan and don't have data centers, hosted in Kenya. But for financial services to be offered at scale, then you need very high computing power. So I find it very interesting in terms of government trying to do something without really doing it. It just points in the direction that it seems to be more of a concern to do with security in terms of being able to access data, so that we don't have a situation that happened in the election petition where people say that the servers are in France and the people are asleep. So just in case there's any data that's needed, then there's some copy somewhere in Kenya. So you cannot excuse yourself by saying people are asleep.
Thank you. Mutindi, I'm going to stay with you, and I'm picking from something Fahim mentioned with regard to cybercrime law. And we have seen how the Cybercrime Act has been implemented in the last year or so, and there has been concerns about stifling free speech. And I want to hear your thoughts with regard to cybercrime and fintech innovation.
So for the Cybercrime Act, what I would say, okay, it's not perfect. There's really no law that's perfect. And I think Stephen had alluded to that, in that we keep on improving the laws as we go along, as technology and I guess life advances. With regards to cybercrime right now, the biggest issue is not necessarily the law. The bigger issue has to do with human resource, in terms of if there's a cybercrime related to financial services sector, including fintechs or even the M-Pesa, which is regulated, mobile money, which is regulated, or banking, you have to report it to you have to report it to the police. But the only center with capacity to take such reports is the DCI headquarters on Kiambu Road. So for the whole country, if there's a cybercrime, you have to report it at DCI Kiambu Road. So if you're in Kisumu or if you're in Wajir, you have to come to Nairobi to report it at the DCI Kiambu Road. Another thing with the criminal law process, and you see a crime is under criminal law, so you have to report it at the police station in person. You have to be there in person. It's not something that you can report on Zoom. You have to be there in person and go through the entire process. You go and lodge your complaint in person, and then you meet the investigating officer in person. You do your witness statement in person. All of those things have to be done in Nairobi. The good thing about it is they try to do all the processing on the same day. So if you go and lodge your complaint today, like let's say at 8 a.m. or 9 a.m., they usually try as much as possible to make sure your process is lodged, it's allocated an investigating officer, and that your statement is taken on the same day. So they kind of like reduce the need to have you keep on going back there. But that's the first part, is it's only the DCI headquarters that can handle these issues or complaints. Then the second part is, in terms of human resource or capacity, I think there are only about maybe 15 or so forensic investigators that would need to do the analysis of the technology behind it to kind of like link the crime to the criminal. So again, there's an understaffing issue there, because that's again the whole of Kenya. And this is not just consumer facing complaints, it is the whole of Kenya, including national security concerns, which again, in order of priority when it comes to service or dealing with complaints, there's a certain order that these things will be aligned in terms of national security or Ministry of Interior issues versus consumer complaints. They do take a while to get resolved, but in looking at the constraints that we have in that area of sector, the DCI is actually doing a very, very good job in trying to manage and handle and resolve the cyber crimes that are reported to them. The reporting process is fairly straightforward. It's fairly straightforward, and even if you're a stranger and you don't know anything, when you go there, they'll be able to guide you through it, and there's feedback. It may take a while, but even if they come back to you in terms of getting the criminal 3 months later or so, like there's actually a level of responsiveness and action that is taken from their end. So the greater issue there is more of capacity for implementation.
Okay, thank you. We do know that one of the principles of proper policy and regulation is uniformity in regulating similar activities or similar services. Now, most payment services, most fintechs are either in payments, funds transfer. Most of the services are quite similar, or e-commerce. Jerry, do you think that there is parity with regard to regulation? And if there is or there isn't, what are your thoughts with regard to achieving that parity for fintechs and other payment service providers?
Thank you. So to facilitate and to achieve parity in regulation of fintechs would require a very, very holistic view from regulators. And indeed, we might not have that parity right now, because what we have seen is that close to over 85% of providers, for example, of digital lending today in Kenya are banks. Now, banks are regulated differently. The fintechs, like the digital lenders who then are outside banking, may not be regulated as much. So to achieve this parity and facilitate the growth that, and of course, cater to the interests of customers and the investors, may require that perhaps some level of equity in terms of the approach by regulators. Now, what we have seen is that a regulation of the non-deposit taking, especially fintechs, for example, which is have their own investment and do not necessarily, lend public funds, then have become. The central bank has stalled in wanting to regulate them for obvious reasons, that they are individuals or organizations who are investing their own money. Nonetheless, I think consideration should be there to facilitate collaboration of tools, for example, KYC, know your customer, to safeguard these investments, and therefore encourage more investors to market and accessing a pool of resources, which, for example, the CRB in order to facilitate and encourage investment, and also safeguard and improve services, safeguard the investments of individuals and corporates, and improve services to these customers. Because as financial technology, as we continue to reach out to the very, very last mile of customers, it is always good to know these customers and not feel that the risk is very much up there. So in terms of regulation, parity is going to be a key element to facilitate growth, to improve innovation, and as well to facilitate excellent customer experience. Thank you.
Thank you. Your thoughts go hand in hand with a comment that Harry made at an earlier session, and he said that there are loud rumors with regard to the position that CBK has taken in dealing with fintechs and with innovation in the financial sector. And the rumors are that the CBK is a stumbling block to that. Stephen, you have been in the industry for very many years. You have seen the regulation of some of the major innovations in the market. What are your thoughts with regard to engaging with the central bank so we can push forward with innovation in the fintech sector?
Thank you very much. That's a very simple question, except for we at the central bank want to make it very complicated. And I want to simplify it by telling us, when we started with M-Pesa, the fact that somebody is moving 100 shillings or 200 shillings, even if that money is lost in the system, is not a big deal. And for that reason, I want to tell us how this research is supposed to be addressed. The problem we're having with the current leadership is that we are not addressing issues from a proportionate perspective. That's what is missing. And when you are talking about parity, because that's where the question has an answer, an enabling policy environment has got 5 components. Component number 1 is stability of the financial system. The responsibility of the central bank is the stability of the financial system. And this is the reason why, like Eric has just said, if most of the lending is being done through the commercial banks, 85%, 90%, in terms of stability, we don't have a stability problem. And for that reason, the little thing that is being done by the digital lenders, we are just blowing it out of proportion. Like when we started with M-Pesa, it was a small thing, but today it's a big thing. So the level of regulation shifts with the growth of a particular sector. So I've been telling Treasury, and I will get more involved, we need an institutional reform in Kenya with regard to how financial sector is going to be regulated, in which case some of these issues should be addressed by Treasury. I'm being very strong there because proportionately, the portion that comes from digital lenders is a very small component. They are just more innovative, and they don't take deposits. And the reason why central banks regulate financial system is partly because of the deposit taking. Number 2, we have financial integrity. And this is where the subject of AML, CFT comes in. That one cuts across. It doesn't matter whether you are small or you are big. Financial integrity is where you have issues of security and safety, and therefore the systems you're offering have to be robust. And these are the ones I told us that international bodies, standard setting bodies, have come up with principles on how to deal with it. Incorporate them in the CBK Act or in the Banking Act, SASRA and the rest, and you have no problem. The main thing that has caused a lot of tension in this market is consumer protection and choice. In fact, there is a restructuring of financial sector regulations, which we call Twin Peak. South Africa has done it. One side you deal with prudential issues, and those prudential issues are the ones we talk about capital and the institution and everything. But there is another side which talks about consumer protection. These two issues of consumer protection and AML can be handled and should be handled for all financial institutions, irrespective, and they should be relatively equal. When you talk about terrorism, it doesn't matter whether the transaction was small. It matters more that it is a terrorist activity. The other issues which are on a policy balance is efficiency. What these fintechs are doing, they are just enhancing efficiency. They're increasing the use of digital services to enhance efficiency. And then finally, you have broad access. The problem we have with the interpretation of these 5 balance issues is a problem of not proportionately looking at each one of them. But the mandate of the central bank is the financial stability. And we will be pressing on the central bank today, tomorrow, and the day after. If a product does not bring on board issues to do with stability, you should allow it to fly. This is why we gave letters of no objection. Long before, we gave a letter of no objection in 2007, yet the regulations were promulgated in 2014. So to me, this is a very simple issue. And the topic of digital letters to me has just been taken out of proportion. And there are other issues behind there, like some sectors may be preventing the entry of these players to prevent competition. Like when we started with M-Pesa, the issue was about competition. And the people who are fighting this debate to me, I can see them from morning to evening. There is somebody who doesn't want competition, and they are doing everything they can do to prevent competition. Central bank may just be playing a game without necessarily knowing who is really calling the tune. Competition is a real issue, and I call it a simple issue, not a complicated issue.
Yes, we are very close to running out of time. So I'll have quick thoughts from Fahim with regard to closing thoughts actually on what CBK can do best to act as an enabler to the industry, and then everyone will have at least 1 second to finish. Fahim, please.
Okay, thank you. I will just first repeat what my panelists have just said on the seamless digital tools. What we are just missing here, the seamless digital tools for the traditional and even the fintech, and then that's why the fintech is actually increasing. Why? Because they have a very good seamless efforts on doing it. They have a speeds of onboarding. There's 100% digital with no branchless or branch visits, kind of required. And again, they are done on mobile, tablets, laptops, and 100% paperless. That's actually the more what my panelist is also saying. My final thought will be that definitely, the things are changing, and the regulatory institutions or regulatory policies also need to be changed. It should be more of fintech, and again, traditional banks should also come to the more to the fintech, and that will be the inclusive financial services to improve the quality of services of our fellow Kenyans and also in East Africa. Thank you.
Okay, Jerry, 1 second closing remarks.
Thank you. So regulation is supposed to facilitate equity within the market, and more importantly, facilitate a good service to the end users. And therefore, we look forward to having regulation that is going to be more robust, more agile, inclusive, and to facilitate innovation, and therefore ensure that we enjoy these facilities which traditionally we were not able to access as a people across the region. Thank you.
Thank you, Jerry. Mutindi, final remarks.
We are currently living in the best time for regulators to look through what they can do best to encourage more uptake of fintech, especially with the current public health crisis and the directive for cashless payments. So I think this is an opportunity in this current environment where even the market is ready to adopt fintech. This is the best time for us to be able to roll out and grow and advance as much as possible.
Thank you, Mitindi. Stephen, final remarks in 1 second, exactly 1 second.
Cybercrime, cybercrime, cybercrime. The reason I say that is that I participated in the development of cybercrime, and I know how much damage it can do if it's not properly taken care of. In that law, we have very good provisions because it's very international, European Union set standards, and for it, we have a lot of deterrence. And I would wish the police to really nab some of these characters, and when they are prosecuted and jailed, we have very deterrent issues there. Country would use digital financial services without feeling the pain. Good morning.
Thank you very much, ladies and gentlemen, for joining us on this panel. Ladies and gentlemen, it is quite clear that this conversation is not going to end today. We must continue talking about regulation and innovation. Each one of us who's in the fintech sector must play their role. We must create an environment that's enabling to businesses and to fintech growth. Thank you very much.
We serve about 50,000 customers in our 52 centers nationwide. With the sensitive large data we handle every day, we've got to work with a partner that provides security for that data. The Telcom Enterprise provides the secure links to connect our Huduma centers, the ministries, departments, and agencies with which we integrate to our data centers. Only Telcom Enterprise has the capability we need to provide efficient services countrywide. Telcom Enterprise puts the enter in enterprise.
Telcom Enterprise, enhancing business growth.
Okay. Yes, we need to be compliant, but also must move fast. Who's Mike? Mark Zuckerberg, founder CEO of Facebook, famously said, "Move fast and break things. Hopefully, what you break is not the law." Zelani, thank you for an insightful panel. African fintech Flutterwave and fast mover in the Ethiopian mobile market space, Amole, just launched a remittance service targeting 8 million Ethiopians in the diaspora. Nala, a fintech out of Tanzania, also recently went live with remittances on the European corridor. With global and local considerations that look at data protection, what does data residency and processing look like for the fintech sector? Looking through the lens of security, Armit Singh, who is a research assistant at the Center for Intellectual Property and IT Law, will break this down for us. Armit, over to you.
Good morning. In this session, I will briefly discuss security safeguard obligations that arise when cross-border data transfers of personal data are conducted by fintech companies operating within Kenya. An overview of the presentation is an introduction to the cross-border data transfers, the Kenyan framework governing cross-border data transfers, international frameworks governing cross-border data transfers, and security safeguards under the Asia-Pacific Economic Cooperation cross-border privacy rules system, followed with a Q&A session. To begin with, it is prudent to understand what is personal data. Personal data is any information relating to an identified or identifiable natural person. A further classification of personal data is sensitive personal data, which warrants higher levels of legal and technical protection. Examples of sensitive data include data revealing a natural person's race, health status, ethnic, social origin, conscience, belief, genetic data, amongst other examples. Cross-border data transfers are the transmission of personal data from one country to another across international borders. Fintech companies across the continent are increasingly adopting multinational spheres of operation. This inevitably results in regular and voluminous transfers of personal data across international borders. Common uses of personal data by fintech companies include customer profiling. Data stemming from online behavior, geolocation tools, and electronic payments can offer financial service providers with valuable insights on the financial lives of their customers and deliver more detailed customer segmentation. Following up is risk assessment. Credit and insurance providers have begun to use data aggregation for risk assessment to achieve more precise risk segmentation and risk-based pricing. Fraud detection through near-time monitoring of accounts by artificial intelligence and machine tools permits a continuous analysis of spending and account management patterns, thus flagging irregular user spending activities or account requests. And finally, account aggregation tools allow consumers to access their accounts such as banking, savings, investments, and such in one single place, such as through a website or a mobile app. The processing of personal data in Kenya is governed by the Data Protection Act, which came into force in November 2019. The Data Protection Act establishes the Office of the Data Protection Commissioner to ensure the effective enforcement of data protection obligations created under the Act. The first Data Commissioner, Ms. Immaculate Kasait, was appointed on 16 November 2020. Amongst the guiding principles of data protection enshrined within the Data Protection Act is the principle that personal data shall not be transferred outside Kenya unless there is proof of adequate data protection safeguards or consent from the data subject. To give effect to the cross-border data transfer principle, the Data Protection Act has determined conditions that need to be fulfilled before personal data can be lawfully transferred outside of Kenya. The first condition is that an entity seeking to transfer personal data has given proof to the Data Commissioner of the appropriate safeguards with respect to the security and protection of personal data. Unfortunately, the Data Protection Act does not provide examples of the nature of security safeguards required, nor has the Office of the Data Protection Commissioner developed guidelines specific to appropriate safeguards that are necessary for lawful cross-border data transfers. The second situation under which personal data can be lawfully transferred outside Kenya is when the foreign jurisdiction has a data protection regime adequate to the framework developed under the Kenyan Data Protection Act. However, unfortunately, the metrics used to evaluate the adequacy of a foreign data protection regime compared to our Kenyan Data Protection Act are still to be developed. Therefore, transfers on an adequacy basis are not certain. The final basis for provided for lawfully conducting cross-border data transfers are a set of exemptions that may be relied upon if appropriate safeguards and an adequate data protection regime are not in place. Examples include transfers necessary for the performance of a contract, for a matter of public interest, for the establishment, exercise, or defense of a legal claim, amongst others. The phrasing of Section 48C insinuates that the conditions listed as exemptions can only be relied upon to conduct a single cross-border transfer, necessitated by a special circumstance, as opposed to measures that can lawfully facilitate numerous and voluminous transfers of personal data. Therefore, the first two conditions being the appropriate safeguards and the adequate data protection regime constitute the measures that will be relied upon by fintechs operating in Kenya when conducting a cross-border data transfer. Furthermore, the Data Protection Act empowers the Office of the Data Protection Commissioner to request a transferring entity engaging in a cross-border data transfer to demonstrate the effectiveness of the security safeguards or the existence of compelling legitimate interests prior to actually conducting the transfer. The Kenyan framework governing cross-border data transfers was heavily influenced by the EU General Data Protection Regulation. Under the GDPR, a hierarchy has been established for the measures used to conduct cross-border data transfers. It being that the European Commission shall first determine if a foreign country's data protection regime is proportionate or adequate to the GDPR, as envisioned within our own Act, and in the absence of an adequacy decision, the recipient of personal data has appropriate safeguards in place to conduct that cross-border data transfer. The safeguards provided under the GDPR are of a contractual nature. The contractual tools are meant to create binding obligations between the transferring party and the recipient of the data to ensure that GDPR standards of protection are imposed on the data no matter which jurisdiction it is transferred to. Examples of the contractual tools include standard contractual clauses and binding corporate rules, which are internal rules which define the international policy in a multinational group of companies, and international organizations regarding intra-organizational personal data cross-border transfers. The second framework to be observed is the OECD Guidelines on the Protection of Privacy and Transborder Flows of Personal Data. OECD member countries considered it was necessary to develop guidelines that would help to harmonize national privacy legislation and while upholding such human rights would at the same time prevent interruptions in international flows of data. The OECD guidelines on the protection of privacy and transborder flows of personal data represent a consensus on basic principles which can be built into existing national legislation or serve as a basis for legislation in those countries which do not have any form of data protection regime. Finally, we will look at the Asia-Pacific Economic Cooperation Cross-Border Privacy Rule System. The CBPR for short framework applies to companies and organizations in jurisdictions of APEC member countries with the aim to establish effective privacy protections. It focuses on minimizing barriers to cross-border data transfers with an aim to ensure continued trade and economic growth in the Asia-Pacific region. The CBPR is one of the few cross-border data transfer frameworks that expressly provides examples of appropriate security measures. And it is on this tangent that we shall derive security safeguards under the aforementioned Asia-Pacific Economic Cooperation Cross-Border Privacy Rules System. Holistic security measures should protect data from damage, loss, modification, disclosure, or unauthorized access. That is to say, the security measures implemented should ensure the confidentiality, integrity, and availability of the data. Security measures expressly identified under the Data Protection Act of Kenya, i.e. pseudonymization and encryption, only address the re-identification of data subjects. The measures do not adequately protect against damage, loss, or modification of data. In the absence of a comprehensive regime governing cross-border data transfers outside of Kenya, fintech companies can adopt the following security measures specifically highlighted within the APEC CBPR system. The following security measures should be effectively implemented by the recipient entity of the personal data in the foreign jurisdiction, and these include 1. Access control measures. Access control mechanisms are security safeguards such as hardware and software features, physical controls, operating procedures, management procedures, and various combinations of those stated, designed to detect and deny unauthorized access and permit authorized access to an information system. Encryption, which is a security safeguard mentioned under the Data Protection Act, is the procedure that converts clear text into a hashed code using a key, where the outgoing information only becomes readable again when the correct key is applied. This minimizes the risk of an incident during data processing, as encrypted contents are basically unreadable for third parties who do not have the correct key. Next are boundary protection, which involves monitoring and control of communications at the external boundary of an information system to prevent and detect malicious and/or unauthorized communication through the use of boundary protection devices such as proxies, gateways, routers, firewalls, guards, and encrypted tunnels. Audit logging is another measure that is commonly deployed. And audit logs represent a chronological record that reconstructs and examines the sequence of activities surrounding or leading to a specific operation, procedure, or event in a security-relevant transaction, from inception to final result. Audit logs are a valuable resource for admins and auditors who want to examine suspicious activity on a network or diagnose and troubleshoot issues. These audit logs can give an administrator invaluable insight into what behavior is normal and what behavior isn't on an information system. Finally, the last expressly provided security measure in the APEC framework is monitoring. Information Security Continuous Monitoring, also known as ISCM, is the process of maintaining ongoing awareness of information security, vulnerabilities, and threats to support organizational risk management decisions. The terms continuous and ongoing in this context mean that the security controls and organizational risks are assessed and analyzed at a frequency sufficient to support risk-based security decisions to adequately protect organization information. The layered application of the mentioned security measures alongside periodic assessments to determine the effective implementation of said measures by entities transferring and receiving personal data can be reasonably construed as the adoption of appropriate safeguards that address the security and protection of personal data. Furthermore, the effectiveness of the mentioned safeguards can be demonstrated to the ODPC prior to conducting the cross-border data transfer, as envisioned in the Data Protection Act. The nature and scale of security measures adopted must be proportionate to the nature and scale of processing activities undertaken. Therefore, smaller companies can benefit from open source technologies, while larger enterprises with significantly larger budgets can opt to purchase state-of-the-art security measures. And it is on this tangent that I open up the floor to a Q&A session. Thank you so much for your time and attendance. I look forward to your feedback.
I've known you from the very beginning. Watched as you started exploring the world. When you first felt that feeling of wonder, I was there when you went from growing your knowledge to sharing it with the world. I was there to make sure you were safe. When you found your forever love and looked on as life drew full circle. I've been there all along, and I always will be.
Amit, thank you for providing clarity on what should be some key concerns for anyone operating in the sector. Like we said before, the distance between service providers and the market has greatly reduced. Financial services and insurance firms are increasingly adopting cloud services that offer operational benefits like faster deployments and seamless scalability, while incredibly being cost efficient and user friendly. Again, questions. What are your responsibilities as an organization in a shared security environment? How are security policies being enforced internally and externally? Which threat vectors are cyber criminals most likely to exploit? How can FSIs monitor their cloud platforms effectively to proactively mitigate cloud risk? Francis Mwangi, CEO at Consitech, is a technology executive with over 10 years' experience in delivering enterprise-wide projects within scope, on time, and on budget while cutting costs. This includes spearheading ROI-focused projects and bridging the gap between business and technology to realize essential integration. He has accomplished all this and more under a variety of professional hats, working as head of IT, system support engineer, and IT administrator. He will drive the discussion around securing the cloud, how FSIs can protect a disappearing parameter. Francis, take it away.
All right, thank you. Good afternoon, everybody, and we are glad that you could join us today for the Fintech Summit 2021. It's an amazing discussion that we've been having for the past 2 days, And at this particular moment, we just want to go ahead and look at how financial services companies can do a better job of, securing the environment, even as more and more financial services companies move to the cloud. So with me today is a group of amazing gentlemen who I'm going to be introducing in a moment, or I'm going to ask them to introduce themselves. And I think we'll just go ahead and begin with you, John. Please go ahead and introduce yourself and tell us more about yourself.
Hey, good morning, actually afternoon in a minute. My name is John Kishohi. I'm a system engineer in the local Fortinet East Africa team. So here this day talking about cloud security. Myself, I have an experience in about 12 years with network and security. So it will be a good discussion for me to chip in to this discussion today.
All right, karibu sana John. Faris, please go ahead.
Yeah, my name is Faris. I run a consultancy firm known as Pay Infrastructure, where we help people with their journey to the cloud. I've been in the cloud and virtualization space for around the last 14 years, from around 2007. So that's kind of like my bread and butter, helping people modernize their applications.
All right. Thank you, Faris. Juan, would you like to go ahead and introduce yourself?
Yes, of course. First of all, thank you very much for inviting me to this event. This is Juan Rodriguez. I am the EMEA Sales Director for Entrust for the part of digital identity. I've been specialized in the area of security of digital identity since more than 15, 18 years. And we are really helping a lot of all financial institutions in order to how to secure their employees and their customers using security solutions on cloud and on-prem in both environments.
All right, thank you, Juan. And finally, we've got Nelson Juma.
Morning, everyone. Nelson Juma, CISO at I&M Bank. Always a pleasure to meet, discuss at CIO forums. Ready to learn, share, effort to be shared by everyone.
All right, thank you. Thank you, our panelists, for introducing yourselves. And we want to just jump straight into it. And if you look at the past 2 years since, the pandemic checked in, a lot of companies within the financial services industry, have gone ahead to adopt some form of cloud technology. In fact, the Forbes website mentions this when they say that before the pandemic, about 29% of companies are the only ones who had about 60% of their workforce working from home at least once a week. After the pandemic, we have seen that shooting up to 69% of companies within financial services now have their employees, about 60% of the employees working from home at least once, maybe in 1 or 2 weeks, or once in 2 weeks. So, Nelson, you're in the banking industry, and I just want to find out from you, with these new developments, I'm sure you have gone ahead to adopt some form of cloud technology. In your opinion, what trend have you seen within the industry? And what challenges are facing companies within the financial service industry, even as they try to secure cloud platforms? And what trends are you seeing within this industry?
Thank you. I think this was a long time coming. It wasn't going to take longer than past COVID. COVID just happened to accelerate it. So the uptake of cloud has been to necessitate operations, even when we're dealing with curfews, even with restricted working hours. What has come up also is in the process of developing these cloud services, where we are dealing with quite a bit of security issues. I'll give you an example. When you're dealing with third parties, you are working with a cloud service provider who you're not sure about their security practices. So you can't really tell that whatever they're handling for you, whatever they're providing for you, whether it is software as a service, infrastructure as a service, how secure is it? Is it better than what you will consider baseline security? Is it below par when it comes to your internal policies? And this has made it rather difficult to deal with the effect of supply chain risk. So, for example, we all know about the SolarWinds story. If the third party is compromised, how will you know, and what action can you take? So you end up realizing that this particular third party offering you cloud services was compromised at some point. So you're a victim either through a data breach or unauthorized access, but you still have to find a way to deal with all this. And then secondly, we are dealing with quite a bit of regulation. So as you plan to go cloud, whatever you try to offer that is in the cloud, you have to factor in compliance to what the regulator has brought up. Majorly now we're dealing with data protection, data privacy. So unless you are aligned to the regulator's requirements, it also becomes an non-compliance issue when you're using cloud services and you haven't secured them as they should be secured. So I think these are the major ones that we're dealing with right now, though there could be a few here and there that are not necessarily large-scale risks.
All right. Thank you so much, Nelson. And I want to turn my attention to Faris because you are a vendor, and Nelson has just come from talking about third-party, partners. And some of the concerns that they have as customers in terms of, is the security being provided by the third party? For instance, if they want to host services on your platform, have you provided the necessary security in place and the necessary measures and controls in place? When it comes to compliance with the regulations, are you in compliance with these regulations, whether it be data protection, whether it be GDPR? So far as maybe you could tell us, because what the customers want to know is what are some of the things they should consider as they are. I know many more are now moving to the cloud, given the space that we are in. So what are some of the things that they should consider? What are some of the critical success factors that they need to look at to ensure, a high level of success?
Okay. So I'll tackle some of the concerns raised and just broadly speak about the approach that should be taken.
Sorry, Faris, you're a bit faint. Maybe you could probably just speak a bit louder.
Can you hear me? I'll say some of the concerns raised, but I'll begin by just speaking broadly about cloud migrations in general. And he's right. Like, there are three things that you should consider. Where the application is going to sit, how much it will cost, and what the regulations are. And generally, like we in the space, we say that there are three laws that you should consider: economics, physics, and laws of the land. So economics is what's the price of the cloud environment? How much will it cost you? Is it the one that's suited for you? Physics is latency matters. I mean, like for instance, I&M Bank is in the payment space. You can't host it somewhere in the Americas because the latency, like when somebody goes to run their card, latency will be too high. So you have to hold it locally, or as close to locally as possible. And then now, as was rightly brought up, like the laws of the land. If the government sees that application has to be in Kenya, you have to figure out how to ensure that the application is in Kenya. You can't sort of say, okay, my best vendor is vendor A or B who's in the US. You have to focus, you have to comply with that law, because ultimately your business depends on the goodwill of the government. Now, when it comes to, and then obviously now that the more usual technical issues, I mean, can the app be ported? I mean, if you're talking about an old IBM app, you can't necessarily move it to the cloud, so you might have to refactor it. So all these nuanced, tiny things, but those tend to be project details that come after you've already figured out which path you're going to take. then I'll give two analogies to sort of discuss my approach and my feeling about the cloud. The first one is that generally you have the way technology is going and the way banks and all companies are moving is you have to have a secure private cloud anyway, because if you're a bank in Kenya today, if you're an airline, if you're in any space, you're integrating with payments companies. So you'll be integrating with Safaricom, you'll be integrating with another bank for, if you're, let's say Kenya Airways, you need to process card payments, etc. And all of these increase your attack surface. And so the first analogy I'll use is sort of like the airline industry. Initially, when airlines came out, they were very dangerous. But the inherent risk forced people to double down on making them safer. And so, people did audits, and there's all these best practice checklists to ensure that, planes don't fall out of the sky. And when something went wrong, like what happened with the 737 MAX 2 years ago, people stop everything and investigate it. That's sort of the practice cloud providers are forced to have. Because Amazon's business or Google's business or Microsoft's business is dependent on that. So they tend to be a lot more diligent in dealing with these issues like zero-day exploits immediately, simply because from day one, their tax is larger. And so the discipline around security is better. And I think many times private clouds are not as secure simply because the fact that it's isolated from the internet allows for very poor security hygiene. And so, you can afford to not patch your application for some time and, to patch your Windows server or your Linux server for some time. And even though there have been some exploits, you're not too concerned. You're not monitoring for zero-day exploits. You're not too concerned about that because it's not exposed. But what's happening is over time, it's getting more and more exposed. Now, on the final issue about cloud providers, I don't think cloud providers in particular are in the same space. I think cloud providers are closer to banks than they are to other tech companies. And simply because cloud providers are selling trust. They're not really selling the underlying technology solution. You need to have faith that when you roll out your application, whether it's a SaaS application or a application, when you roll it out, find it. When you come the same way, it's safer to leave your money with a bank than it is to leave it in your money. And so cloud providers need discipline and to trust of their customers over time. That's something that will simply take time. I feel in this region, that trust has been broken a couple of times. And so it's harder and harder for people to trust local providers. But, trust is observed by breach. I mean, somebody is honest until they lie to you. And then you view them as a crook. So I think there has been a problem when it comes to developing maturity within the local cloud hosting environment. Though you do have people like, there are a couple of local providers who, I think Liquid Telecom with the Azure Stack, and there are a couple of people who have been able to maintain that trust. And I think that's the path that will see more adoption. Ultimately, the cloud providers need to demonstrate that they're more trustworthy than holding your money internally. And it's similar to what happened when the banks failed in Kenya, when Chase Bank and Imperial Bank collapsed. People quickly went to the other banks that they felt were more safer. And the really small banks have all struggled since because, it's a trust thing. And trust takes time to build and time to accomplish. So it's a bit of a chicken and egg problem, but I'd say the ball is in the court of the providers to demonstrate that they're more trustworthy and better skilled at running those environments than an individual IT department is, because that's the game that changed abroad. People trust Amazon implicitly, and people trust Azure, people trust Alibaba, and so the adoption accelerated. Yeah.
All right. Thank you so much, Faris. It all begins with trust. Trust is a big deal here. And maybe I can now switch to John Gishohi from Fortinet. And I'd like to sort of take you down the same direction. When your customers come to you, because you are the other vendor in the room, when your customers come to you, what are some of the classic mistakes that you're seeing them make in terms of putting in security controls? What are some of those things that they are not doing right? And what do you think are some of the hindrances to that? Could it be an issue of lack of budget or lack of stakeholder support? Could it be there's an issue of lack of skilled personnel internally? So what are some of these challenges or mistakes that you're seeing them make, and how can they be addressed? How can you as a vendor, advise companies in the financial services sector that this is the direction that you need to take to secure environments, even as the perimeter that we have known all along is, disappearing now?
Okay, thanks, Francis. So the mistake that we see most customers do here is to assume that they'll take the traditional model of building security from their on-premise data centers to the cloud or multi-cloud data centers. So the traditional ways of deploying physical appliances or host-based security solutions does not scale well with the cloud, because cloud is about SDN, is about API integration. Security component of the cloud must be must extend to the cloud platform itself using, for example, API. So I'll break it down in terms of the three clouds that the customers can deploy security solutions to. So in the public cloud, the customers need to understand that there are two models in terms of cloud security. There is the security of the cloud, where the security is provided by the cloud provider to secure the network storage and the networking of the cloud environment. But for the customer, there is the security in the cloud. That is, it is their responsibility to secure their data, their applications, their servers, for example, and all the applications that they are hosting in that public cloud. It is their responsibility to deploy security solutions in that public cloud. In the private cloud, the mistake that we are seeing customers do is to think about security later on, after they have adopted a virtual platform. So SDN functions, software-defined networking, must be part and parcel from day one when they are trying to design the virtualization platform in their private cloud. The SDN function brings security as a service within the private cloud, so that they can be able to implement segmentation, micro-segmentation in terms of east-west traffic inspection of the security function as a service. The third and final kind of cloud environment that the customers will find themselves deploying is the hybrid cloud, where they'll have, for example, an interface between their private and multiple, let's say, public clouds and SaaS clouds. So of key importance here is for them to have complete end-to-end visibility, control, and have a security policy for their applications, irrespective of where or which cloud their data sits on. So they need to have a single pane of management so that they can enforce these security policies across the multi-cloud, and it needs to have some kind of intelligence to tell them about, let's say, the security attributes within the cloud environments and in the outside world in this case. They need to segment because not all applications are the same. So they need to segment because obviously of compliance reasons, and to mitigate the risks of lateral spread of threats when they are compromised. They need also to think about secure connectivity, because when you started off, you talked about remote workers. So we need to do a zero trust access model, where we give access securely, but access that is limited to whatever function that the user must be able to enforce. So as a guideline to customers adapting cloud security, they need to think about 4 key things. Is the security solution that you are about to partake scalable enough to scale with the cloud environment, because clouds are elastic. So cloud workloads are elastic. Do you have a consistent policy that you have deployed and across the cloud environments in terms of a multi-cloud strategy? So this is another key thing that the customers need to think about. Have you segmented your cloud environment adequately so that you can do a finely refined security policy in your cloud workloads? And is your cloud security solution, or the one that you're about to adapt, is it adaptive? Can it follow the applications to where they are, irrespective of which cloud it sits? So these are some of the key guiding questions that we tell the customers to think about when they are adapting cloud solutions, security solutions, that is. Back to you, Frank.
We're betting on the technology for the future, not the technology for the past. So having a broad network, having global companies now running at full enterprise scale gives us great comfort. It's dead clear that no one is innovating in this space as fast as Cloudflare is.
With the help of Cloudflare, we were able to add an extra layer of network security controlled by Allianz, including WAF, DDoS. Cloudflare used as a CDN also allow us to keep cost under control and caching and improve speed.
Cloudflare has been an amazing partner in the privacy front. They've been willing to be extremely transparent about the data that they are collecting and why they're using it, and they've also been willing to throw those logs away.
I think one of our favorite features of Cloudflare has been the worker technology. Our origins can go down and things will continue to operate perfectly. I think having that kind of a safety net, provided by Cloudflare goes a long ways.
We were able to leverage Cloudflare to save about $250,000 within about a day. The cost savings across the board is measurable, it's dramatic, and it's something that actually dwarfs the yearly cost of our service with Cloudflare.
It's really amazing to partner with a vendor who's not just providing a great enterprise service, but also helping to move forward the security on the internet. One of the things we didn't expect to happen is that the majority of traffic coming into our infrastructure would get faster response times, which is incredible. Like Zendesk just got...
All right, ladies and gentlemen, we are back. Our apologies for the technical hitch. But just before we went off, John Gishohi, you just talked about, segmentation and secure connectivity. And one of the reasons why, most companies and financial services are finding a hard time with security is because they think about the security after, jumping onto the cloud. And I just want to move to Juan and ask you, building on what John has talked about, what are some of the other measures that the organizations in financial services can take to secure the data of to secure their customers and also their data? Would like to hear your input on this.
Yes, hello, Francis. Okay, for me, and from the point of view of Entrust, I think it's essential to have a digital identity strategy in place always. This is going to help always the organizations to face this type of challenges and this type of security issues whenever you are trying to protect your employees and your customers and your data, which is very important. So, for example, from our vision is that the strategy we should put in place should be split in three big pillars. The first pillar is how to establish trust. So in this specific case, we have to understand how we are going to validate and verify the identity of all the users, all the customers, all the employees that remotely we want to get them on board on our systems. This is very important, and for that we are providing solutions like ID proofing, which is automatizing the verification of any passport, any ID of the person before we allow them to get access into our systems, okay? As well, along with some facial recognition technologies, okay? At the meantime, when we are talking about cloud, when we are talking about digital things, we have to really think about that whenever we are registering a new customer, we really need to registering a device with them. So we really need to understand if that device is trustable as well or not. This is something that many people are missing in the onboarding process, and for us it's critical. Because imagine if that device is being used for fraudulent attacks. So maybe if we know this information previously, we are going to reject the onboarding of that person. Okay? So this is the first pillar in order to establish trust with someone that we don't know, because we are doing everything in a digital way. Remember that thanks to COVID, the acceleration of these new techniques are in an incredible way. And at the end, we have to adapt ourselves to the new wave, okay? So the second pillar would be how to transact with trust. That's as well very important. And for that, we are suggesting to use an identity and access management tool where we create policies, where we can define rules, where we can define access for all the employees, for all the customers, to the different data, to the different information they should be available. This is very important in order to protect the data and the information of the company. As well, thanks to this type of solutions, we are going to generate the right credentials for all the users, and then we will be able to authenticate them in the right way using different mechanisms of authentication, like, for example, fingerprint, facial recognition, push notification, okay? But not only that, with these tools are important because are going to help us to transact with security, and whenever any customer, for example, of a bank, would like money transfer, we are going to protect that money transfer using this type of mechanisms of authentication, which is very important. And at the end of this second pillar, we are going to add another security element, which is very important. It's whenever we want to make a transaction through internet using our credit card or debit card, we are going to propose to use a 3D secure technology in order to make a risk assessment of each of the potential transactions any user can do with a card, with a credit card or debit card through internet. Okay, so in that way we secure the whole ecosystem. And the third final pillar would be that we are going to monitor the activity of those users while they are on our digital channels, online or mobile. So we are going to detect if they are acting in a strange way, and then we are trying to prevent potential fraud that they may generate if they are trying to do strange things. Okay, so this is what I believe it's extremely important all companies should have in mind. And this is very quickly because we don't have much time, but it's essential to have a digital identity strategy in place. Essential. Thanks to that, we will be able to avoid many fraud and many problems in the future.
All right. Okay, thank you so much, Juan. And indeed, very interesting points that you brought out there in terms of a digital, identity management strategy. How are we managing how our users and our employees and our customers are accessing these platforms? And I'd like to really just, emphasize on what even John from Fortinet has talked about when you talked about IT leaders, don't just think about when you're moving to the cloud, how you're managing the infrastructure on the on-prem, structure. Don't assume that it's going to be the same case when you move to the cloud. You need to adapt with the times. You need to change with the times. And Faris, also when you talked about the need to consider what cloud providers that you're using and whether they have the necessary controls in place. So we could really indulge in this conversation to a great length, but unfortunately we have ran out of time, and I want to just go ahead and give a big thank you to you. Thank you, Nelson Juma from INM Bank. Thank you, Faris Karaoke from Pure Infrastructure, John Gishohi from Fortinet East Africa, and Juan Rodriguez from Entrust. Thank you so much for your insights today, and we really appreciate your time. And to our audience, we really appreciate you tuning in to listen to this conversation. And thank you for tuning in for the FinTech 2021 Summit. I'm glad to have been your host, Francis Mwangi from Cositech. And until next time, do have a great afternoon. Thank you.
Welcome back. Try visualize a line drawn in chalk on a Nairobi highway in the middle of a thunderstorm. And the idea of this disappearing parameter or boundary might just become real enough. Security is a running task that can never be said to be done. And we cannot gamble with the issue of trust. And if you're honest with ourselves, that can only be assured by ensuring what needs to be kept in remains in, and that which needs to be kept out remains outside. A big thanks to Francis, Nelson, Fares, John, and Rodriguez. Now, this today's will be for nothing if we do not sit and eat from the table of best practice. Michael, the CIO at OK Law, is knowledgeable in various fields in the tech industry. As a contributor to the CIO East Africa magazine, he considers himself a voice of reason on several industry agendas and how those affect the greater picture. A firm believer in the power of people to innovate through technology, he is passionate about the changes that could be realized in the fintech world and also on the larger economic scale through disruptive technologies. Over the next half hour, Michael will share success stories, best practices, and use cases for innovating through fintech adoption. Michael, show us who's doing what. Karibu.
Good afternoon, ladies and gentlemen. My name is Michael Meshi. I head information and technology at OK Law. Today I'll be taking you through a use case of how to use game development and gaming principles to improve financial services applications. So just to kick right off, of course, there'll be a lot of discussion around games. So lots and lots of games, from the old games, which some of you can appreciate, Minesweeper, Dangerous Dave, moving forward to more recent releases such as Cyberpunk, God of War, and Senua's Sacrifice. Just a bit more just to make sure you're in the right mood. It's going to be I'm going to heavily reference games. All right, so why games in particular? Games from the beginning of time have always been a means that as humans we've used to communicate to one another, to tell stories and to interact. And this constant growth of games has evolved over with time and with technology. And we have found games being leaps and bounds ahead of the use of technology compared to other industries. So what we're going to look at particularly from the gaming industry is design by subtraction, accessibility, feedback loops, failure states, strong AI, and heads-up displays. To start off with design by subtraction. Now this is a principle within gaming where, of course, we simply say less is more. In design by subtraction, the goal within game development is to ensure that the core aspect of the game, which is the emotion you're trying to invoke or the sort of connection you want between the player and the game, is at the core of the design. If you could see on your screen, we have several images. The first shows a player in a game where they're out in the desert, and you can see there's a lot going on the screen, a lot of information. Now, then this should be now on your other hand side, you should see one where this information is packed into the physics of the game, where you can see the health bar, you can see armor and statistics being shown as part of the player's body. Now this is designed by subtraction, where you remove the clutter away from the screen and make the game more immersive. Now design by subtraction being pushed into financial services would by default include now the two pictures at the top. For financial services, you'll see are two different mobile banking apps, and you'll see for both during mobile money transfer, what you have is you have a question of Safaricom, Airtel, and Telcom. Now, with design by subtraction, what this would mean is you would remove these three options, and you would let the system on the other end decide by means of prefix, whether 0724 is Safaricom or 0733 is Airtel. So one, of course, this reduces your utilization of space. Space is no longer crowded on the application. Secondly, what it does from a cybersecurity standpoint, it also saves you a lot of error message reporting and the risk of buffer overflows, especially where the wrong number is sent and you hadn't predicted for that, or maybe a new prefix is added and you've not updated your systems yet. So there's also that cybersecurity element to it. So ideally the design, once you've implemented design by subtraction, what you would see is just send money to self or other and the amount. You wouldn't necessarily have to determine which network it is. And this goes as far as to other services within mobile applications, where if it's even doing remittance or money transfer, if it's something that should be associated with the system, it should be. Again, during the development, you should remember that you're developing this for an end user whose goal is to have an experience that they would enjoy when they're transferring or making any transactions. The goal is not to make them feel like they work in a bank or in a financial service institution like yourself. They don't need to have all that information. A lot of the information can sit back with the system. The next one is accessibility. Now, accessibility, especially now during the pandemic where everyone is moving to a cashless system, digital means of payments are very important. Accessibility now becomes quite a challenge. The traditional model, accessibility has been catered for by, for example, having ramps in buildings to allow for anyone who has any impairment of mobility. Now we're moving everything to digital, so of course now the developers have to be conscious about exactly how these apps are built in terms for people who have any form of impairment, whether they have a sight impairment, speech impairment, vision impairment. So how would they address this? Ideally, it's addressed under four key levels. You have the basic level, the intermediate level, the advanced, and what we call the full set. So the basic level basically would just be, for example, taking care of increasing the size of font. So allowing the users of your application to decide if the font should be bigger or smaller if they have a vision issue. Allowing the app to either dictate what's on screen if they have any, also if they are visually impaired. Intermediate involves a bit of coding. Of course, that would mean changing of the code significantly, whereby you could decide to create filters for colorblind. If people are colorblind, how would they be able to distinguish certain items if it's a necessity for them? Advanced basically means now you'd get a professional who would also guide you not only just in what features you'd put, but how the app should be designed for people who have multiple impairments. And then the full set basically encompasses using all three. So a quick show, as you can see on the screen, what we have first of all is a game where it's quite colorful. Then on the next screen, the colorblind accessibility option is turned on. And now what you have is, some colors are still there, but you'll notice now the colors have shapes in them. So now that will allow the player to see a connection or to see similarities between shapes, sizes, and etc. So far, I haven't come across any application in the financial sector which has attempted to do anything on accessibility. Next, we have feedback loops. Now, feedback loops exist everywhere in the world, action, reaction. The question is now, what is the intent of that action and reaction, and how does it affect the experience of the user of this financial application or the game? For example, in particular, we have two types of feedback loops, which are the positive feedback loops and the negative feedback loops. Positive feedback loops are mostly reward systems, which in gaming tend to reward a player for doing well. And negative feedback loops tend to balance out the game so that there is no huge gap between the best player and the worst player. So this within financial institutions, what you'd see within feedback loops basically is if someone inputs the wrong PIN, they receive the right message that it's a wrong PIN. The communication they get during a successful transaction, for example, they receive a notification from the app, the transaction is successful. Is there a need to follow that up with an SMS? Is that an overload of feedback that would confuse the user to thinking, if I only get the app notification, does that mean without the SMS notification, I shouldn't trust the transaction has not gone through? So such questions whenever you're developing the feedback. Of course, even when you do show something such as wrong PIN or request timed out, how does it look aesthetically? Is it shouting in the user's face? Is it too subtle that they'd miss it? Just finding the balance where it's giving information as opposed to screaming danger. Next, we have failure states. Now, failure states is what happens when in gaming, when the player is not able to complete a certain task or complete a certain action within a given time or given parameters. Now, we have multiple types of failure states. We have the time, we have progress, resources, power, and everything. Now, with time, it basically means you're given a 30-second challenge within, for example, a game such as Need for Speed, where you have to drive from point A to point B and beat a certain time. Failure to which the game restarts to the beginning or restarts to a certain checkpoint. Now, within financial services, this to be borrowed could be how long does the app stay inactive before it requests for a PIN to be input. So, for example, you log on to one of your banking apps or one of your other financial apps, you put in your PIN, you're looking at your account, you put your phone down. How long during that time of inactivity should you wait before the app then decides you have to start all the way from the beginning? Or alternatively, how far back should the app go? If you're busy making a transaction, there are certain fields you have to fill in, then something goes wrong and you press the back button. Does that mean you start from the very beginning, or did it save part of that data and decide that will only take you 3 steps back? For progress, this is basically the same, just how much progress do you want to undo for that particular person. If I was doing an account, if I was opening an account on a mobile app and I stopped today, tomorrow I come back to the app. Will the app allow me to resume my previous application, or will it tell me to start from the very beginning and start uploading files and filling in KYC documentation? Next, you have resources. In gaming, resources basically means if, for example, you're playing a game such as Age of Empires, which is a world-building game, you would lose resources such as wood, food, gold, stone would be taken away from you. So now, in the case of the app, how do you use this failure state? Do you reduce, if you suspect, this could be used in multiple ways. For example, just by reducing the limits of someone's transactions. All of a sudden, someone's account is transacting 100 times today. Normally, he does 20. At the 21st time, he could have an automated trigger to reduce the limit. If the limit was 10,000, or you move the limit to 1,000 until you do some form of verification. Power within games means just dropping down the level. So in games, for those who play games, different games have your players leveling up in terms of skill and abilities, and probably even weapons that they could use. So in the event that something would go wrong, or you fail a certain challenge or mission, the punishment would be to reduce your power. This is just to make it now harder for the next time when you try to play. Again, if this is taken into the context of financial applications, what you would have is, if there is an abuse of the resource, then do you have you set a limit for example, someone is verified at being able to transact up to 500,000, then you realize the photo they sent you probably is not the actual photo. So now you reduce that to probably 100,000 until they do the proper KYC. So that is one other option. The other one, which is everything, this is where once you fail in a game, the game basically starts as if it's brand new. So this, of course, would be quite difficult to implement for financial services and quite crazy. Could imagine you put your wrong PIN and you lose your whole account. So probably wouldn't advise putting that in financial services. Next off, we have strong AI. Now, one of the key things the gaming industry has gotten right is its use of AI. It's one of the best places where AI is even tested upon. We've seen Google build different forms of AI, Deep Blue and Deep Thought, all to compete in chess games, AlphaGo to play Go and the like. So what games have done, especially with AI, and the two on the screen are probably what stand out as some of the best. There's a game called Fear, which is first encounter, assault, then recon, where the AI was built in such a way that there was no need to set a difficulty for the game. So if you played like a newbie, the game would adjust accordingly. And beyond that, the AI would notice how you're playing. So you'd play for 15 minutes, it would think you're just rushing through the game, it's not fun anymore. It would then start creating obstacles based off of how you are playing yourself uniquely. So your AI enemies actually learn from how you're playing. So they realize you like to take headshots, they'll put on helmets. You like to go behind cover to pick up your gun, to go behind cover so that you can pick them off one by one. From a safe position, they'll destroy any point of cover or they'll trap them. The other game is Rainbow Six Siege. In this game, what they did with the AI is that they were able to the AI was able to analyze data between how users play, and then it would recommend maps, it would recommend designs for weapons, and even new characters based off the data it could collect. The AI would be able to help the game developers improve on the game in future. So how this would appear within a financial services app would be, the app would be intuitive to each individual user. It would be able to know that you're using this app mostly for deposits or for investing. So options such as withdraw, send money would disappear from your homepage and would be stored somewhere else. So the app becomes completely unique to yourself. Of course, all these games all look different, but there's all one thing they have in common. And I guess it's the old adage of, if you ain't broke, don't fix it. So as you can see clearly, all these games have the same continue game, new game, load game, options, exit, sort of like a normal landing page. And the financial services have also taken the same route to also build sort of the same landing pages for all the applications. How this proceeds to go on is that there's now a standard which we all like, but that template then becomes a challenge. So as you can see in the next slide, we have two apps which this is their landing page and does not change. Then we have the app at the very corner which is asking you to edit your favorites. Now this may not be dynamic through, it's not been enforced by an AI, it's mostly asking you to choose what do you want to use, and that's what will appear on your landing page. So hopefully as we move towards the future, we'll see more apps take up this dynamic approach in order to allow my experience with this app to be unique to me and to be sort of tailor-made for me, and for someone else with the same app, that also works. Another thing, if I could just go back here in regards to Rainbow Six Siege, which games should be able to, apps should be able to do, and it's probably something the financial service needs to solve, is when you have multiple people who need to make payments for a single item. Now, in such a game such as Rainbow Siege, it's a multiplayer cooperative game. So you play 4 people on the same team trying to achieve a common goal. So the financial services app in this case would be if we all bank or we all use Fintech X or Bank Y to do our payments, we're out having dinner or it's lunch. When the bill comes, either through NFC or some Bluetooth or whatever other model that's there, we're able to split the bill. So from one user, he can assign ratios or percentages of the bill, and everybody pays, and it appears as a single credit to the restaurant owner. Now I'd like to just share with you a few videos as I do a quick walkthrough. First off, we have is video number. So this first video is a game called Besiege. And this is what happens when you get creative with a flat space and turn it into a 3D space. Just how you could improve on your user interfaces so that all banking apps don't look like it's just skin they're changing. The next video that we have is one thing that's lacking is sort of like a guide to how to use an app. And in this game, Titanfall 2, what you have is you have a hologram showing you what you should be doing. This goes a long way into training users, and also could also be used for financial inclusion purposes to help people realize this app is not just meant for transactions. You can use for saving, for investments, for growth, for setting goals that can be built into it. Lastly, the video that we have is a game that basically encompasses all these principles. And so just here we just have aesthetics. As the game moves on, the game is Control. It's Game of the Year for 2019. So you can see the principles of less is more. Basically off of the colors and the buttons to interact, where it was asking the player to open the door. It was a small action bar, but very noticeable by design. The game also comes with a lot of accessibility features to allow for people who are colorblind and those who are deaf, those who have some other vision impairments to be narrated for the game and to be told where they are at the game and what's going on around them, in order for them to play. Now, the last bit of this video, I'll just show you what we call the design by subtraction. Of course, the AI in this game, as it was also built similarly to the Fear AI, where there was no difficulty that was introduced. And all that happened was, if the game sees you're a good player, it offers you a challenge. If the game becomes too difficult for you, it avoids making it too frustrating for you to quit, but sort of relaxes the difficulty. So at this stage, as you can see, the game, now this is all just cinematics, and the gameplay starts quite shortly from here. You'll see that there's little difference and there's little information given on the screen to allow for that immersion between player and the game. So this stage, all you have is your objective on one side and your health bar. The character Jesse is armed with one gun as opposed to multiple guns, but the gun changes form. As you'd seen earlier, it now has sort of an enclosed triangle. Before it had sort of the triangle was turned inside out. So this allows, this is doing less with more, having one object serve multiple purposes. The next part where we see feedback loops is coming up shortly. And so here you can see there was a yellow arrow that showed a certain direction. So this is a feedback loop to show damage. And you'll see it again just here. So this shows the direction of the damage that's coming towards it, and of course the health bar is reducing. So this is a feedback loop that of course shows you, that allows you to learn. You can also see the visual feedback loop of the screen turning red on defeat, and of course the fail state, which of course in this particular game will just take you to the start of that particular level. So what I would like to encourage future fintechs, the neobanks, and the banks which are trying to build a true digital experience is they need to spend some time in the gaming space with game developers, and I think they'll truly build an app that's sticky and that's worth its experience. Thank you.
You always knew you'd be in for a ride. There'd be ups, downs, twists, and unexpected turns. It would be an exciting journey, even a little scary at times. And although it's difficult to predict what's around every corner, there's something else you understood. Transformation is essential for your business, your people, and your customers, so you can stay agile, resilient, and relevant in an ever-shifting marketplace. At SAP, we understand that true transformation is a journey too. It goes beyond the edges and deep into the core of your business. But it's a journey you don't have to take alone. No matter where you're starting from and where you want to go, we're by your side to simplify planning and execution and integrate data, intelligent tech, with cutting-edge ERP that will accelerate outcomes on your terms and on your timelines. The road ahead is clear. The next turn truly transformative. It's your time to rise with SAP.
Guys, we did it. Today, 630 attendees across the platform. We could never have asked for anything better than this, and it is exciting to know that people are engaging with this content. People are excited about the fintech space, and it's just amazing. I mean, some of the highlights for me across the 2 days was one, when David Cracknell talked about the future of fintech in Africa, that it's an early game. There are no winners yet. Hatuwezi toa podium. We can't come and say, and since it's a long game, it's like a marathon. You know that when you look at sports, the build of a 100-meter runner is different from that of a marathoner. So in my mind, the sprinter is maybe you've got access to capital, you've got access to a team, but will that ensure that you're there in the next 5 to 10 years? I mean, like we said, it's nobody's game yet, so we all must keep innovating and keep running forward to that mark of ensuring excellent customer experiences and services for consumers. Loved seeing Ken Joroge again. Mm-hmm. He was my second boss straight out of college. And it is clear that overnight success and being able to raise the equivalent of, it was 4.5 billion shillings for $5 million raise is 18 years. 18 years. Like 18 years. If you had a child today, 18 years, when they're leaving home, is when you'll have seen some sort of exit. I think it was powerful that he was able to share his five insight points. Laura, we need to craft a song, and she'll call it Security, because security is a song that we must sing time and time again. Every single summit, there will be a segment on security, because it is a running concern. Why is this important? We only have to have one mistake, one infiltration. For guys, and there are many, whether they're on Twitter, LinkedIn, there are many pundits sitting there waiting to tell the larger industry, even regulators or government, to say, I told you so. I told you so. I told you you'd lose money. Don't use this technology. Don't do A, B, C, D. So you must sing the the song of security time and time again. Loved that Ali and the team were able to launch the Association of Kenyan Fintechs. Bravo, clap, clap, clap. And why is this important? If there's one guy that you cannot tussle with when you're trying to build a business, is government. I mean, as opposed to, if we're talking about dances, it can't be break dance. Utavunjika mifupa. It has to be like a slow waltz. You know, you talk to them nicely. You like work with them. And in the end of the day, we're able to then see innovations that we can take beyond the continent. They say that government has more time than you have capital. If you know what I mean, you can be stuck in litigation in a court of law for 20 years, my friend. Time and technology will pass you and you'll have yourself to blame. I love that the father of M-Pesa, and someone also called him the grandfather of M-Pesa, Stephen, talked to the regulators directly and said, dear regulators, the way to go is not to regulate the technology. Regulate the service, and that will drive innovation. Giving a direct example of that is to say, the service would be something like remittance, right? How do I send money to my brother out in the UK, or how do I receive it from the US? That is a service. Build regulation around the service. If you come and try to regulate the underlying technology, then you cripple us. Saying that you can't use, say, blockchain for ABCD, saying you can't use voice for ABCD, saying if it's in banking, or you need to have X billions of shillings available, that might not be the way. Regulate the service, not the channel. I think in closing, from my part, one of the things I'd like to see more, and this is an appeal to you who are viewing us, some of you are deeply competent in your areas of expertise, is we need to see more use cases. Could we, for example, look at the 10 leading financial services apps in Kenya or in the region and say, if it were in my docket, I'd change this, I'd change that, because it would make for a more elegant customer experiences. These use cases and best practices help us to have very tangible things to work on as soon as we close the summit, because you can go back to your teams and say, I learned something new today, and on our app, could we remove this particular feature? Actually, the founder CEO of GoBeba, a logistics company, I remember him mentioning one of these things to me and said, Mbogwa, for us, I don't see why I need to ask for your email and your full names while you're ordering gas. I just need your phone number because I need to call you to confirm where I'm delivering this thing and to collect payment. That removes a lot of friction. So I think that wraps it up for me, and maybe you could tell us more about what we can be looking for.
Yeah, and Bogo, I really like the way you've summarized everything. I couldn't put it any better. Just 3 things I want to add on to, or rather to explain a little bit more, go into a bit of a deep dive of what you've talked about. Security. You've talked about when one small thing happens or one big thing happens, everything collapses. Our audience, you're in the financial services industry. You deal with a lot of money and a lot of data. I don't need to say more. Secondly, engaging government when you're trying to get a business sector off the ground. Yes, like the fintech, yes, the dance. That's typically courtship. How you court your spouse or your partner before you settle and start a family. That's basically what you're saying. And finally, one of the things that I want to mention is the use cases. I'm asking the audience, some of you have done amazing things out there. Please step up when we're having these summits and share your use cases of the amazing things you've done, so that the technology community does not have to reinvent the wheel. That's the first thing. And the second thing, don't forget, we have a reward at the end of the year, which is CIO 100.
Exactly.
Yeah. So if you share your amazing stories in your organizations, then we can also start looking at how we can start getting you to submit your CIO 100 projects, so that we're able to award you and celebrate you at the end of the year. And on that note, before Melissa hits me with a hard stick before I leave this stage, Melissa is going to push out the CIO 100 calls for nominations in the next couple of weeks. Please look out for that and submit your projects. I want to talk a little bit about MarTech. Okay. When I was doing my keynote yesterday, I talked about CIO East Africa is looking at having a marketing technology summit. And today, for the last 2 days, we've heard about how customer is king. Customer is important. We must make sure that we enhance the customer journey, respond to the customer on the spot, and all those things. From your perspective, what do you feel about marketing technology, and do you think it is relevant and important in our market today, considering tech has taken a big role and businesses must continue, and we must continue building our brands?
Excellent question. I think for any business, whether you're for profit or social enterprise, the agenda is always to make some form of return. And that return can only be made through interaction. I think the key thing that I'm looking forward to the MarTech Summit is how do we then ensure compliance when looking at the area of privacy? That I come to your shop and I leave you with my details does not mean that I want to be spammed. That we've all left probably our phone numbers or our email addresses when signing into a building somewhere doesn't mean that Laura wants to sell me shoes, can go and pay someone and get that data and say, nimefanya marketing, niko na database. What are the best practices that we can adopt? And probably how can we actually do this? Because the tools are there. If you're looking at email, if you're looking at messaging, if you're looking at voice, all of these solutions are there. How do you leverage, Facebook, TikTok, Instagram properly to make sure that it makes sense for you? If you do not know what you're doing, you will throw money into a black hole, and then you come saying, this marketing doesn't work, and then you start resorting to all manner of covert moves to try and make a buck.
Yeah, and I think you do have an important point. This is why companies pull back marketing budgets, because they feel like they don't see return on investment. You have to do it in a smart way. And this is why we are bringing to you solution providers, technology ones around marketing. So please make sure you talk to your marketing people to join us next month. You will start seeing some sort of marketing materials around the summit that's coming up next month. I've actually just received a call from one of the biggest MarTech companies in South Africa, and they're so excited about this summit. So they're looking forward to joining us next month. So the audience, please remember to do that. Now, as I close off, I just want to say thank you so much to my team at CIO East Africa. I don't want anyone to think that it's only Laura Chite, the face of CIO East Africa, who does these things on her own. I don't do these things on my own. Ladies and gentlemen, I'd just like you to look at the faces behind all the summits we have, all the activities we have, the production of the magazine, the production of the virtual summits, the fundraising, the agenda, everything that we do. These are the faces behind all this. And I'd like to say thank you so much to my team. Kudos to you guys for being patient. I know it's been such a difficult time trying to transform and be agile at this time of the pandemic, but I do appreciate you, and we look forward to having many more summits together. So, to the sponsors, thank you for being with us today. To the speakers and moderators, thank you so much for making everything amazing. To our MC Mbugwa, you're amazing. Thank you so much for the great emceeing through the last 2 days. And to our audience, we cannot do this without you. Mbugwa just mentioned 630 today. Yesterday, he mentioned we had about 490. Do the math yourself. So those of us who partnered with us, I think you're going to see a lot of value. We're going to make sure we continue engaging with you, and we're going to make sure the audience continues engaging with you. Please respond to the polls and the surveys so that we're able to connect you to the solution providers. As we walk off this studio set, I want to ask Mbugwa one question. I saw you posting something on Instagram around Sandak shoes. What is that about?
Sandak is, for those in the audience who may be too young to know what I'm talking about. Sandak was this plastic shoe that every household used to have, right? Fantastically functional, but could also get fantastically hot, and you'd have to know how to wear the shoe. But when looking at it if I can connect that with solution provision in the fintech space, it met such a need and was able to achieve such a scale that Sandaks actually were household names. Every household needed a Sandak, or every household had a Sandak, and more times than not, that Sandak was passed on from generation to generation. That shoe just didn't get finished. So it was very nostalgic when I saw the picture of a Sandak slipper online, and I posted it on my social media.
Yeah, so this shows you the power of innovation, actually, when you think about it. We've been talking about innovation in the FSI space all this time. What we're trying to say here is that SANDAC, we have a lot of plastic waste in this country or in this continent today. Why don't we convert that into useful things like shoes, recycle, and do many other things with it? Ladies and gentlemen, that is all from all of us from the CIO East Africa TV studios. Thank you very much for joining us for the FinTech Summit. Have a safe weekend and take care of yourselves. Cheers.